keeps ticking, but I won't slow down. Building my empire in this buzzing town. Casting my vision on the silver screen. My funded life, a vivid sheen. My funded futures, light the way.
Good morning, traders. Happy Wednesday. Welcome to My Funded Futures and My Funded TV. I am Terry Trades, and we have our expert traders, Bull, Barbie, and Nick Does Futures. Good morning. How are you both feeling today?
Doing good.
I've seen better days. My throat has seen better days. So I'll be all right though. I feel fine, but it's just like I wish I could just take out like my nose and my throat and just say, "Give me a new one."
So it's those extracurricular activities getting to you.
Yeah.
Good. Good morning, chat. How is everyone doing today? It is Wednesday, wonderful Wednesday. Type in 1 if you're feeling wonderful, and type in 2 if you're hoping to feel wonderful later today. Yeah, not too much happened in the markets. It rallied, it V-bottomed off some news yesterday. Who would like to get us started first, Nick or Barbie?
Yeah, I'll go ahead and knock it out here.
Thank you, Nick.
So I'm gonna do two things. I'm gonna recap my trade yesterday, and I'm gonna also kind of give what I think's gonna happen today. So what I was watching yesterday was what happened after we ran this low, right at 10 o'clock. I wanted to see if we just spliced through it, because if we did that, then I think we could have went for that Friday's low or previous weekly low. But the fact that we failed to displace below it showed me that price wanted to go higher. We also had that 4-hour gap right here that I was that I had marked off. Replay, go back a little bit. So we had this 4-hour gap that I wanted price to trade into anyways. It was just a matter of, are we going to do it right at open, or are we going to do it like after we made a run lower? So we had the run lower at 9:30, and I feel like that trapped a lot of people short. Like 9:30 open, the first 30 minutes, 30 minutes, it went lower. So we took out this low. My entry was right around in here. 604.75, and I was targeting the London high, which also is the low of that gap. So my stop, my entry was right here. Stop was like right around in here, and target just over 2R. Make this a little bit bigger. I did take the weaker pair, just because I like trading NASDAQ, and I have more a higher risk to reward on NQ compared to ES. So yeah, so we got the closure above here, and if you look on the 1 minute, we had my model on the lower time frames as well. The only problem is we had such a big sell-off that I was like, okay, like we just ran a low, let me just get like confirmation on like the higher time frames a little bit more. So I combined the fact that we had this lower time frame model with a 5-minute move right here. So the IFEG closed above that. As soon as that happened, I bought in, and then it moved pretty nicely. It did almost edge me right there before taking me out and take profit. So ES was obviously stronger, and it hit London highs before NQ. If we go back to that same day, if you guys remember me talking about yesterday that we had relative equal highs on ES that I was watching, I have marked off. So those were like right around in here. They were relative equal highs from London. They were not the London highs. So there was some right here, and we had some right here. ES would have been the better one, I think, maybe to trade. I just didn't like the risk to reward on it. But yeah, I ended up working out. So it's good to just kind of come in here. I didn't really expect much yesterday. I needed everything to go out perfectly. Either we go higher into this gap and then go lower, or we go lower off the open and then we go higher. It was really the displacement and the speed in the candles that really did it for me. So that's why I went from not knowing what's going to happen to to taking a trade within like 30 minutes or so. So let me
Great trade, Nick.
I appreciate it. It feels good to kind of get one early in the week. I kind of like to ease into it, but like if I can steal one out the gate on Monday, Tuesday, which I guess yesterday was Tuesday, but it was the first trading day. It feels pretty good. As for this morning, I'm still anticipating higher prices. I think we're gonna go back to all-time highs by the end of the week. It could come in here and consolidate, but I'm gonna be waiting for 10 a.m. again. Just the main reason for that is we have a potential gap forming in here on NQ and ES. If we don't form one, we could be seeing Asia lows or a move lower. There's also a 4-hour gap in here as well that price could come down into. There is a SMT at the highs right now. ES ran previous day high, NQ did not. Let me see here. So that's really what I'll be watching for on indices. Just kind of the 10 a.m. open and see how we close. But yeah, that's pretty much it. As for gold, I had some people in the Discord take this yesterday. I didn't really see it, but yeah, I guess the one thing you can mark off is the 4-hour gap right here, and just kind of see how we trade on the 15-minute. Once we dig back into there, do we sweep this low and then come higher? Other than that, that's pretty much it for me. We are trading inside of a daily gap to the downside, but I wouldn't really be too worried about it until you start seeing that hourly displacement lower. As of right now, you're not. It's just bullish conditions at the moment. So that's pretty much it for me.
Thank you, Nick.
Yeah.
Bull freaking Barbie. What are your thoughts this morning?
Well, this is the same chart we were looking at yesterday, and I want to point out a few things. This is the consolidation area that we were stuck in, and then we had our breakout point, and we're nearly back to it. So that would be like the complete taco trade there. But that is one of my main watches right there. The 6750 level was our breakdown point. So that's going to be major resistance. And it's definitely going to be a key level today. If we get over that, we're kind of back in this range. I do expect it to kind of be a tough level to get over. But what happened is we had a bearish move and the market has responded bullishly. And then we had Powell come out yesterday. His speech was pretty dovish, and they keep putting the dovish speakers from the Fed on the agenda. So even though we're not getting news, we're just getting all of these dovish signals for now. So that's what we have until we have anything else, which could be some numbers that, are more bearish. But for now, we just have all this bullish news coming out and the market's responding. We did have some big earnings. Well, ended up being big earnings calls overnight, helping with this gap up. So, I mean, this isn't just the market floating or drifting higher. This is a real move. So that's just reiterating that bullish stance that the market is taking. We're coming up to support though. So like I said, I think this is going to be a key level to get over. Once we get over this level, assuming we get over it, which may not be today, could be a different day. The target above that is really the all-time highs, because we're back inside of that range box where the top of it's the all-time highs. Until we get over that, until we get, are over 6750, we're working to get over there. So until then, we're kind of watching these levels lower. I think kind of the key levels that we're watching, I had marked out Monday's high and close and everything there. We should really watch the levels from yesterday too. That high there is around 6722.50 on ES to see if that's something. An extreme bullish scenario would just kind of retest lower into Monday's high and Tuesday's high and continue on higher. I think it's decently likely that we can get inside a little bit, because at the end of the day yesterday, I wasn't around for this, but I did notice this on my charts when I came to this major pullback that we had late in the day. That's kind of given us another key spot there. It was right near Monday's close level too, around 66.90. So that's kind of that next little level that I would be looking lower to see if the market's going to come lower. And then below that, we have the major support of Monday's low and kind of this zone that's been forming above the gap that we were trading into the other day. So what I'm looking for is I would love to get a little bit of a pullback, test back into when we're opening with a gap up, see if we get at least some of that filled, and see which level we can start to get the buyers to show up at. Because the way that I always look at things, and I left this trend line on here the other day because this was the trade that I was looking at, but basically we had to move lower and we were at a key level, and I was looking for rotation at that key level. So this is the same kind of move that I would be looking for at these levels. It might be a little smaller without these big wicks. It's not in a big gap down here. We have a much smaller little area, but that's basically what I look for. I look for price to come down to these key levels and start to show signs of rotation or curling. I'm going to look at the order flow, see if the buy side's picking up, that sort of thing, just to get an idea of which level is going to be most likely to get bought there. But my bias for the day is definitely back to buying lows. That will change if we start getting back below these where we've been trading. This is the Tuesday overnight, and then that Tuesday open. This is the top of that gap from the Sunday open as well. So if we start getting down here into the 66.32 area where that gap starts and holding below that, that's a whole different story. But as long as all of this starts to hold, the way I look at this, the market came down, couldn't even fill a gap, checked the midpoint and the FOMC low, and was like, all good, let's go. And so I don't want to fight that power. I just want to be patient and wait to get in as best I can so that my stop loss isn't crazy. So that's how I'm looking at it this morning.
Thank you, Barbie. Dip, baby, dip. Okay, you guys, top chatters will be rewarded later in the stream. It says, MyFundedFutures dropped in chat. We will go by the XP list YouTube has implemented. Stream was intentionally scheduled later so that everyone has a fair chance. Thank you. Awesome. So you guys chat away, and then you get points for how often you're chatting and participating. And then MyFundedFutures will pick the top people to give a prize to. Let's go. I love that. More ways to win accounts.
So all they have to do is just type, right?
Yeah, exactly. Just participate. We do love it when you guys all participate. So the government is still shut down.
Yeah, no, that's no fun.
Yeah.
I think someone said, yeah, CPI is still on the. I keep seeing mixed stuff. Like, see, it's like next Friday. I see it's not next Friday. Like, which is it, Barbie?
When's the government opening up?
No,
I don't know.
CPI.
Well, that'll depend when the government opens up.
Well, if you look on Forex Factory, NFP says tentative, and then I read online that the CPI is going to happen next Friday, and then on Forex Factory it also says like 8:30. It doesn't say tentative, so I wonder if it's still going to happen.
It's from the Bureau of Labor Statistics, though. I mean, Forex Factory is doing their best to keep us on a schedule that they don't have, and these have little stars on them too. It says release date delayed. I don't know if those are official or not. I mean, it's still. I see what you're talking about, where Thursday shows tentative and Friday doesn't, but I don't know for a fact that BLS is going to be open. So I don't know.
We shall see. CPI. Hopefully, we get a nice move off that.
Yeah, you guys ready for Halloween?
I did eat a bunch of Halloween candy already, if that's what you mean. No, I'm not quite ready yet. What about you guys?
Yeah, no, we got we got these people in our neighborhood. They got like these scary, they do like the it clown and all this other stuff. And my son is just so scared of them. You know what I mean? So
Oh,
he likes
like
like the little,
outside.
yeah, he likes like the little dinosaurs dressed up with like pumpkins and stuff. But the other stuff kind of scares him. And don't get me wrong, some people just go overboard with it.
Oh yeah, like the entire front of the homes with like headstones and lots of different things.
Well, no, there's like one that has like a cutout of a dude, and like his like there's a hole in his chest, and like there's like something next to him like holding like a heart or like I'm like, what the fuck?
Oh
You know what I
my
mean? Like
gosh.
y'all going like too far with this.
Yeah, that's intense.
Yeah.
Barbie, are you ready for Halloween?
Well, she probably don't have any.
Yeah, I
neighbors.
got my Halloween tree up. Yeah.
Do you have any neighbors? So you can even go.
Oh, nobody can see my house, if that's what you're wondering. Nobody else could see my house. It's not that kind of neighborhood.
Yeah.
Yeah, there's no trick-or-treating here. Kids have to go somewhere else.
Yeah, I think the one thing I'm not looking forward to is like daylight savings time at month. It'll get dark like 5 p.m.
Yeah. Your take on it is you want it just completely set and so we don't change, Nick, with daylight savings?
100%. 100%.
Me too. I think that would be nice. Barbie, what are your thoughts on daylight savings? Do you care either way?
It's stupid.
Yeah.
I mean, it's like it's not an opinion at this point. There's studies. It's an objective fact that daylight savings is stupid. So
Yeah, on top of that, like if it gets dark at 5, Asia opens at 6, it's dark outside. Like people are just gonna start blowing accounts at 6 p.m.
Well, that's actually, isn't that the standard time? Or no, it is. Is that the daylight savings time that starts? I get confused too about which one's which. Are we in daylight savings time now?
Yeah.
Well, I think it comes back on like November 11th, or something like that. Like the second Monday in November, or the 3rd of November. Oh my God, that's like 3 weeks. Not looking forward to that. And you guys know what they say. ICT says don't trade the Monday after daylight savings time.
So right now we're in daylight savings time. We're moving back to standard time. So you like daylight savings time?
Oh yeah, well the other one, like yeah.
I had to look that up. I was like, wait a minute. Yeah, we're in daylight savings time right now.
Yeah, November 2nd at 2 a.m. Oh. That's even on Forex Factor.
That one I think they know.
Yeah.
That one doesn't depend on the shutdown.
I don't know. They might screw something up. Our government can do that.
True.
Do we still have that scale add-on thing going on right now?
We do, yes. So you can use code YouTube to receive 5% off. And then when you select the scale plan, you can do the add-on. And then that gives you the ability to withdraw up to $6,000, up to 50% of your balance. Use code YouTube. And Matt on X is teasing that it will go to core sometime this week with the promotion. It is a promotion. It's completely free, and you don't have to select it if you don't want it, right? It's just for the people who want it. Just gives us more options, which is nice.
You know what? I looked up Nick's question because I didn't even notice that earlier with the CPI. And it looks like that is a confirmed release for CPI. They've recalled some staff because it's a legal requirement to get some data out. And so that's one of the data points that they're getting out. So they have to release that one for Social Security numbers. So that one is coming out. We have CPI coming.
Yay!
Something.
On a Friday. I'll take
That'll
it.
be different.
I'll take it.
Right?
It'll be weird, but
yeah, so that'll be fun. How many days has it been? How many days has shut down? It's been 15 so far.
Ugh. Kind of starting to feel like a long time.
Yeah, especially when you're just going through all these trading weeks and like there's just no news at all. Barbara, did you see what Trump did yesterday? He started beef over cooking oil or something, cocoa powder or something.
yeah, something about the soybean oil.
Yeah.
I just read the headlines because it's like another one of those. Here we go. It's just another little loop. Round and round we go.
Oh, was that the market dumped like 200 points within 15, 20 minutes at the end of the day? Was
Yeah,
it
and then
that
after
dump?
that, I just ripped higher. So it was
Yeah.
all fake. Yeah.
Wild times. Wear your safety belt. You do have to wear your safety belt in this market.
Yeah, no.
That's the thing, like we can't predict when that's going to happen. I mean, no one knows, right? Like when Trump is going to tweet, well, maybe some of his closest friends might know, but like none of us are going to know.
Well, it doesn't really matter. Yeah, I mean, we're never going. There's things that we're never going to know. Even the market, like the the whales and the smart money and all that. Some of those guys might get a little advance notice every once in a while on one thing, but it's not like anyone knows everything. So we shouldn't try to get hung up on trying to figure out who's going to drop what when. Instead, we have the levels. The market, even though we had a big dramatic reaction, perfectly respected the levels. Because even on when we were talking down here, we could go back and rewind because I know I said this, but when we were chopping around up here, I was talking about if the market had a really, really major reaction lower, like a big shock to the system, we would probably go down to 6,600. And that is, we dipped a little below it, but that's basically where the market ended up holding. So the point being, like, even if we don't know what's coming, we know the levels that the market's likely to go to and can create a plan to react at those levels. So yeah, having said that, that's why I was looking, if we get a major move lower, we're going to look at 6,600. That's a really good buy spot. So that's why we were loading up calls and things when other people were freaking out, because that was still a normal spot to hit. It wasn't the market's going to crash spot. This is a normal, healthy spot for the market to come down to. So that's why I always kind of look at it. It helps keep me out of all that FOMO craziness a lot. And just knowing that the market's going to market, we have to give it that space. That's why we have stop losses and risk management and money management and the knowledge that not every single trade works out.
Well, also too, I think whenever you get like crazy news like that, crazy daily candles, like opposite of order flow, I think you should just like fade it until like price just like shows you otherwise. Like for me, I was looking for the daily candle for previous weekly low yesterday to get taken. It didn't get taken. I'm like, okay, it's bullish. Right. So same with the move down yesterday afternoon. Like it was like based off news in a bullish market. It was a bearish news driver, I guess you could say. But it affected the market in a bearish way. So like I'm gonna fade it every time. I think back in April, I don't even think we were really in a bearish market because like it was only like it wasn't even a quarter that we were bullish, like that we were bearish. I think like we ended up flipping in like the monthly or the quarterly candle flip bullish. So and it was all based off of just crazy news and tweets and tariffs and things like that. So that's just how I would approach it.
Thanks, guys. What are you guys thinking in chat? Are you thinking long or short or no trades today? Let us know. Oh, I do see a question. What do you think about gold just going up? What do you consider a good asset to park money in now?
Is that a question? I think it's a question for Barbie.
Yeah, question for Barbie.
Oh, I mean, I don't give financial advice on where to park your assets, but
park your assets, your butt with MyFundedFutures.
I mean, so the name of the game when everything keeps climbing up is finding those opportunities where something's lagging or just literally waiting. I know it's frustrating and nobody wants to do it, but waiting until we have big dramatic moves down like we just had. I mean, holding long term, a lot of times you're working on building positions, so it's a long-term process. And I mean, I wouldn't just park. There's not one thing that I would just park a bunch of money in. I'm always building positions in SPY and SPY related things. There's a lot of different ETFs and they're leveraged different ways. So that's kind of a larger plan and not a short answer. But I mean, the indexes, you just kind of look like the indexes kind of always go up, right? You kind of find the things that are staples and can kind of always go up. And if you buy at highs, you have to know that you are going to be potentially taking some heat. So that's a decision that you have to make. Am I okay taking some heat buying at highs, or do I want to wait for a pullback? And that's what comes down to your money management again. So we have money management in futures trading. We have money management in buy and hold. So it's a whole different ball game. But
It is very different. It reminds me of when friends will ask you for like stock advice, even though, you know, if you're day trading and specializing in day trading, yeah, it is very different investing versus day trading.
also,
Okay.
if you want like exact stock picks, that's what your financial advisor is for. So.
Yes. 2 minutes until the market is going to open. MyFundedFutures did drop a poll. Are you going long or short today? So far, it looks like 67% are looking to go long. Jay Yif says he's looking for a retracement for longs. Yeah, we are at these overnight highs.
I mean, if you buy highs in the we've gone up pre-market, you really have to risk the market retracing. And so that's why I kind of think about, if I want to go long and there's a strong risk of the market retracing with the profit taking from overnight, then I'll just wait for that profit taking and see if I can get in a little bit. Sometimes you get really good buys waiting for that.
I agree. I think we're gonna go lower before we go higher.
Hopefully. Need some meat on the bone here. One of my main targets up there on ES is 67.50, so I want more than 10 points to there, you know.
The bulls are in charge. Okay, less than 20 seconds now. Countdown to the open. Let's go. Put on your seatbelts, everyone. Make sure you're using your stop losses. Okay, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Market is open. Good luck. We are getting that push lower. I'm going to hop into a short looking to target VWAP. I might get smoked. We don't know. Hopefully we get that retracement that Barbie and Nick that you both want. It'll help me with this short.
Yeah, no, I feel pretty good about it. We're not gonna have an hourly fair value gap right there, so I think we're just gonna bleed. I think we're gonna bleed a little lower. London lows are 24,868 on NQ, and then 67,0650 on the ES. Let's see. We'll have the gap here.
Yeah, I feel like with these retracements, it can reverse so quick.
Yeah, no. Look back in April. That was crazy, right?
Yeah.
I don't even feel good about this hourly gap here on NQ on ES. I think I would just like for it to just go London lows, honestly. 15-minute. It's so crazy. I tweeted out yesterday. There's 22 trading days. Like only like 5 or 6 I know like 90% of. I know 9%. I'm confident, like super confident that I know where it's gonna go. Whereas like today, like I can look at the market and be like, oh man, I have no idea what we're gonna do, right? It's kind of wild.
And that's like your experience, right, Nick, of just trading, of being around the markets for years, of knowing like what are your A+ like setups, like what does that look like? And today you're like, yeah, I don't know.
Yeah. Also, too, it's like being tired of like your own crap, right? Like getting like thinking you need to trade every day and blowing accounts or losing money. Whereas like you can protect your peace of mind, and at the same time, like you can do really well trading. Like last week, I think I had trade Wednesday and Friday, and then this week, yesterday, so Tuesday. So if I have one more, if I don't have any the rest of the week, I'm cool with that. I think most people just can't accept it, but because it's like it's the harder thing to do, right? That's why I have like this up here. It says do the hard thing today. Like the hard thing people think is pushing the button and putting on risk. Like, that's actually the easy part. Over trading, FOMO, all those sorts of things.
Do the hard things today.
100%. I'm gonna go with a 15-minute just because like choppy. Watch for this 15-minute gap. If this thing gets respected, we could go to that previous day high. But if we start to bleed lower from here and disrespect this 15-minute gap, then that could be the sign that price wants to go lower. But we'll get that candle close here in about 12 minutes. Let's see something like this. Kind of what I think is going to happen.
We do have those conditions where NASDAQ's moving one way and ES is moving the other.
Yep.
So another vote for waiting.
Well, YM, let's check out YM real quick. Oh, ripping higher. Great.
You're bullish.
That's a pink candle right there for Barbie. Or is that are you green candles?
That one's purple. No, my YM chart is purple and white. That way I know it's YM really quick. Because I have my line charts too, and so I have everything color coded by index.
Yeah. But your candles themselves are okay, so your red candles are pink and your bullish candles are green. Okay, gotcha. Yeah.
I got these index charts. This is what everyone's used to looking at. So purple's my YM color. Got blue Russell.
Is it purple because it's toxic?
No, it's just purple because it's purple. They're the pretty colors. So I have this line chart, and it's the pretty colors versus the aggressive colors. This one only has 3 of them on there, but the indexes get the pretty colors, and then the volatility stuff gets the aggressive colors. It makes perfect sense.
Let's see. No, the max isn't 250K. You have to have either 550Ks, and that's it. Like you can't have like 3 150s and 2 250s. You have to have all 50Ks. Barbie. This is Barbie's screen right now.
Not anymore. Now we got Nick.
Oh, someone is asking how to make custom indicators like Barbie.
And code. It depends on which platform, which programming language it is. I've kind of realized I have to know multiple. But in TradingView, it's PineScript. I don't really think much of PineScript. I think it kind of sucks personally, but you can't do a lot with it. And then in NinjaTrader, it's based on C#, but it's technically NinjaScript. And then a lot of my options bots are just written in Python. Holy crap, I just looked at my options account.
Good?
Yeah.
Look how big her eyes got. Looking at options.
It's up over 4% just on the day. I
Woo!
haven't looked on it yet. It's a big account too, so that's a lot.
Let's go.
You buy calls on Friday?
Yeah, and yesterday. And we got in Intel yesterday. That one's helping. We got in Intel yesterday morning, so
Hey, good stuff. Yeah, her eyes
it's
got
all the way
real
back
big.
down to 60%. Well, because 5% a
That's a
day is
lot.
kind of insane on a big
Mhm.
account.
All right.
I'm just hanging out in that short. It was in profit by about $200, and then it went red, and now it's just hovering around break even. We shall see. Oh, Rafa asked, what is the news for the core accounts? Hopefully we find out soon about the promo, the add-on, the Flex add-on that we're doing on the scale. So currently it is still running. You can use code YouTube for that. And then at some point this week, we should get something about the core. Here we go. It's about $300, $400 in profit right now. Let's go.
Good stuff.
I'm gonna, VWAP is moving up, so I am going to move this a little bit higher.
No, the core add-on I think is 3K. That's what they were talking about.
Yes, that is what Matt posted on X, and he said it's coming this week, which will be amazing because the core plans, like for example, the 50K core plan, it's only $77 with the 5% discount by using code YouTube. It brings it down to $72. There's never an activation fee for any of the MyFundedFutures accounts, all end of day drawdown and instant payout. So it's like incredible, $72. And we can hopefully this week withdraw up to $3,000, which is amazing. And we only need $100 or more 5 days to request the payout. So, but yeah, same with the scale add-on, it will be 50% of your account balance. So I think that option is really good for people who want to withdraw bigger payouts, right? Because right now the core, for example, the core 50K, it's only, not only, but you can withdraw up to $1,000. But the cool thing about that plan is you can withdraw into the buffer, which a lot of firms do not let you do that. So that is a really big advantage. Yeah.
So you said on the core plan you can withdraw into the buffer?
Yes, exactly. So theoretically, like let's say you pass a core account and you make $110 over 5 days, you can request into that buffer. Like you don't have to hit a profit target, to take out money. So you could withdraw what, $600 minus, or no, you have to leave $100 in there. So you could withdraw like $500 and $50 or something like that. Yeah, which is so cool. I love that. I think it's the power of the core accounts.
Yeah, they're cheap too. It looks like the ROI on them is pretty high.
Yes.
Someone's been asking what the rules are for the Flex add-on. It's not so much there are rules, right? How do you put that?
Yeah, I think the rules are still the rules of the account. Are you asking about like the payout rules? DSTD?
I keep seeing that question, so that's why I thought I don't think there are any other rules. It's just the increased payout limit.
Yes, exactly. And it's 50% of your total profits available you can request up to. So if you have $12,000 in the account, then you can request up to $6,000. Ooh, I'm feeling like I wanna book this thing. You know, the market, it can just like reverse, I feel like that initial flush. Yeah, I'm not liking this. Okay, I'm gonna close this out. Let me close it out. Quick.
Would have been nice if
Okay.
you at least got down into the 20s.
I know.
That previous day high.
It's just so strong, right? And this, maybe this is a top. I have no idea. We did lock in a little bit. I think like about $50 or so.
See. Yeah, one thing too is I look at the 15-minute candle, right? ES is ripping higher, NQ is lower. So it's kind of all over the place at the moment.
Mm-hmm.
So
these, well, we're not on my chart right now, but the oscillator, oh, here it is. This oscillator, if you're asking, is the Mo roll. It's a proprietary indicator. I wanted to be able to watch multiple time frames. This is actually squeeze based, but I don't watch the regular squeeze indicator anymore. I'm watching multiple time frames to see when the squeeze is squeezing and rolling over, basically based on where it is on this midline. I'm more interested in when it's rolling over than when it's squeezing, to be honest. So that's what this is helping to show me. I can get little hints from lower time frames when things are starting to roll over, and that'll help me because I really like to play rotations or breakouts, so I can see if I'm getting a rotation or a potential breakout at a level. That's always a thing. Like when you're trading level to level, is it gonna break or is it gonna reverse? That's what I'm always watching real close when we get there.
man.
Proprietary means that I came up with it myself. I coded this. That means it's mine. Nobody has it unless I gave it to you.
Let's see. So NQ selling off. Looks like ES is starting to get in suit as well.
Yeah, come on. Let's at least get that high. I want to see potentially get through that high from yesterday, which should be 22 3/4 on ES. We're below it on NASDAQ. NASDAQ is not as bullish. Yeah, there's a red flag for me when one's moving one way and one's moving the other way. That's what helps me with patience, though, is it's not giving me what I need. Even though we're getting buying down here on ES, I don't trust it when we've got NASDAQ not holding it yet.
Yeah, look at that. Completely just ripped.
I'll say there goes ES. ES actually just triggered the orb long. You might have to switch. Oh, wait. That's the orb long that's just triggered. I'm personally still kind of waiting because I'm wondering if we're gonna get a little bit lower, but I'll let this guy go. I'll switch to this one so I can watch the other chart as well.
Oh man.
There goes NASDAQ.
It's going. The high from the opening candle is 25,004.25.
Yeah.
Buyers really showed up on ES.
It would make more sense for us to run that previous day high on NQ.
Ooh, she's wild today. Oh my gosh. Oh man.
Yeah, personally, I'm waiting to see what's going to happen here because even though we're sitting bullish, we're doing a lot of whipsawing around. There's NASDAQ down there too. When these shapes are this opposite like this, I don't remember what I have this level on here for, but when these shapes are this opposite like this, it's a red flag warning. Wicking Wednesday, yeah. That's what we got going on.
Yeah, Whipsaw Wednesday, Wiki Wednesday, 100%.
Yeah, lots of wicks on the 5-minute candle so far. The tops. Ooh, there's a poll. Do you eat candy corn? Yes, I like candy corn. Nick, Barbie, do you guys like candy corn?
I'll do it, yeah. I think it's pretty good.
Who doesn't eat candy corn? M asked. ICT Trader is addicted to candy corn.
I mean, like, if it's out, like, if someone gives me one, I'll eat it, but like, I'm not just gonna like go out and buy it. You know what I mean?
Yeah, like you don't crave it. It's not
Nah.
like you're like, ooh, I have to have it. Oh, someone,
Oops,
Barbie, it looks like you're muted. What's your favorite Halloween candy?
Oh, did I not respond to any of that? Oops. I was saying I like the little I don't know if it's my favorite, but I like the pumpkins that are the candy corn material, I guess.
Oh yeah, they're like chewy. It's a
Yeah.
Yeah, I like that one too.
I was letting everyone know too the NASDAQ orb triggered short. This is definitely red flag conditions. We got one triggered long and one triggered short. So patience. I know patience is more boring, but pays more. So
patience. Market is marketing. I am hopping in a short. I'm gonna hop in the 15-minute orb, Barbie.
Alrighty.
Let's see what happens. I'm not going to go for one though. I'm gonna do a little scalpy.
Yeah. I'll probably mark off like London lows, have your alert set like when we run that. NQ is definitely the weaker. 15-minute looks way better than the 5. I'll say that. So
people are getting whipsawed.
We're almost down to the previous day high on ES.
NQ is hovering around previous day's high. Yeah, for people who are joining us later, MyFundedFutures will be giving away some free accounts to the top chatters. So make sure you participate, and then MyFundedFutures will look at the XP number and select the top chatters for a chance to win your free account. Yes, Ethan says chat away.
let's see. Pretty choppy so far. At least at the 15 minutes do a retracement. Inside the previous 15-minute candle. So
hard time keeping up with chat with that little bonus they're getting today.
Yeah. Let's see here.
You know what's annoying? I had a little order down there at the ES previous day high, and it did not get it.
Oh no.
My thoughts
Rocky
on
Mountain, you're only up
competition.
1,600%. Come on. What, Nick?
Someone's like, "What's your thoughts on competitions?" I was like, "I mean, they're all right." Nick, does blue light glasses help you be profitable? 100%, man. It's like I can see the markets just so much differently.
Yeah, the orb bot's going crazy. I can't even keep up with it. It's not going to be a good day for the orb bot right now.
No, but it's horrible for the orb today. Oh, there is an SMT at the lows. I mean, technically, you could, and this could be something to previous day high. It's just a matter of, it's looking at the 15-minute chart. And you're kind of like, okay, this is all pretty indecisive. I'm sorry, the 5-minute chart, pretty indecisive candles. But the fact that we are so close to previous day high and we didn't run it, maybe so. Maybe it does want to get up there.
I did exit out of my short, took a loss on that.
Yeah, now ES is looking like it's respecting the 15-minute gap. 3 times 0, so 1, 2, 3. I'm kind of anticipating NQ to go to previous day high. After that, I don't know. I don't know if it's a dump or do anything. Shoot, it could actually even chop in here some more. NQ doesn't need to run up. ES can do its own thing. I've seen that happen. We've seen that happen a lot of times.
Interesting. Well, I was gonna. There's a few questions that were kind of similar about the pre-market ritual, so I'm gonna go ahead and answer those. I see we're watching you guys for good questions, but the question was general. How do you prepare yourself for? How do you mentally prepare yourself each morning, and kind of what's your pre-market ritual? So I'll throw that to you guys, but I'll go first if you want. So my morning's probably one of the crazier since I have kids. Nick's probably dealing with some of that too, but the focus is always getting kids and animals and everything settled, and then I can kind of put my trading brain on. A lot of the times while I'm running around taking care of animals and kids, I'm still kind of keeping an eye on the market and kind of checking in on my phone. But then once I get to the computer, it's real serious, and I'm finding levels and looking at what happened overnight and what that could potentially mean for where we're headed next. And then after I get my plan together, that's when I kind of sit back. It's like, okay, I'm not going to take, this is why I kind of give myself my little pep talk. I'm not going to take random trades. I'm going to wait for these levels. I'm going to wait for the plan, remind myself kind of what the mission is. The mission is here to make money and not to call the high or the low and impress everybody. The mission is to make money, remind myself all of that. And then I just wait for the market to come to my levels. So I like having that kind of regular routine. That is the regular thing we can do, even though the market does something different every day. And so I try to have a regular morning to at least have regular preparation.
Yeah, that's good. Oh wow, I have a lot of questions here.
Ooh. Market is going higher.
Let's see. Nick, why is your name Nick? Okay.
Is that the winner there?
Are those ICT glasses so you can see FEG better? Yeah, yes, sir. Do you have a good advice to trade more stable after a big purchase? To swap my first apartment and then blew all the fundings the same day. Yeah, you have to just like you have to separate yourself, right? And it's so hard because like everything is just so attached to money with trading. So you think, you take a losing trade like you did something wrong. It's like you didn't do anything wrong. Like sometimes it's just part of the game. So if you can't take losses, it's just trading just ain't for you.
Facts, yes.
Let's see.
NQ
here.
is looking like it wants to take out that overnight high. Pretty close.
What would be the biggest advice you would give yourself 3 years ago about trading? Risk management is key, I think. Risk management. Well, probably more trades don't equal more money, probably. Yeah, that's probably what it would be.
Mm.
Ash, do you see anything on the NQ 1 minute chart? Yeah, no, I pointed that out. We had the 1 minute breaker off the 15-minute low. So we had the low here. So the entry would have been right around here, Ash. I think that's what you're talking about. Targeting up to previous day high. I'm sorry if I sound like out of it because I am. Hanging on my thread here. So yeah, about 2-hour trade will be up to here. Type 1 in the chat if you took that.
Here
Whoa,
we
yeah,
go.
ripping.
Yeah. NQ is looking to make some new highs here on the day.
Yeah, no, before I head out here, okay. Pay attention to this hourly candle, right? This is kind of crazy on NQ. So like if this thing closes like how I think it's going to in the next 30 seconds, it may come down doing an open low, but I don't think it's going to take this previous hourly low at 24,897 on NQ. It could if it's a pretty choppy market, but I don't think we've ran previous day high yet. Yeah, we haven't ran previous day high. So I think the most likely scenario is for NQ to run this previous day high, then come back into the range. Meanwhile, ES is ripping. So, like I say, I said yesterday I would not be surprised if we're back all-time highs. But
There's a code. There's a code, Nick. There's a code.
Okay, yeah, I'll let y'all get the code. I'm gonna head out of here and probably just blow my nose. So y'all have fun.
Oh, wait, don't go yet. W, everyone, type in W in chat for Nick for joining us, even though you're not even feeling that good. Thank you so much.
Yeah. Y'all take it easy. I'll see y'all back here tomorrow, hopefully.
Okay, see you tomorrow. Bye. Let us know if you got that free reset. Ooh, look at this. She is pumping.
I was going to show you a really annoying trade, though. Let me make sure I know which account, or double check the account before I switch over. This is my annoying trade. It didn't get me.
Oh my gosh, so close.
That was going to be a big trade. Oh, well. Still got this one going.
MyFundedFutures says once Terry reads a question that, it's moving so fast. Once Terry reads a question, that'll be the third winner for the 50K scale account. Oh, so exciting. That is annoying trade, Barbie. I hate when that happens. When it's so close to your entry, but it just missed it.
It's 30 points up from that.
In ES too? Each point is $50, right? Oh, man. Okay, let's see. Next question. Oh, okay. Ernest Jan, what is your favorite type of trade to take? Let's see. Let me copy your name. Ernest, I missed your name. If you can tag me again, so we can make sure you get that free account. My favorite type of trade to get into is when I get into the trade and it immediately goes in my favor, takes no heat, and then it's super quick, right? Like within a few minutes or within 5 minutes, I can close it out. That's my favorite trade. Also, like as far as like just maybe a longer type of trade, I love the gap fills. In the morning, if we're up a bunch, and then if I like either short it or long it with like 1 micro and just look for a gap fill, I like those trades. That type of trade is very relaxing to me, especially with like 1 micro. Good question. Barbie, what's your favorite type of trade?
The one that makes me money. I try not to pick favorites. That's kind of my whole outlook on trading the market is I have the framework, which is my analysis and where the key levels are. And then I have my like execution playbook. And I think it's important to be able to keep adapting my playbook. I have plays I don't use anymore because I've outgrown them or the market's not really in the best climate for them and things. So for me, I don't want to get married to a favorite. I want to be able to keep going. I will say right now, one of my favorite trades though is the one that I did the video on that I called the Stampede trade. We actually had it on NASDAQ. I missed it though because I was watching ES. We had it right there. Let me take this screen off. That's just when we have a key level. And I honestly, this is an old level. I don't remember why it's there. So I wasn't paying that much attention to it. But when we have a trend come down to a key level and then rotate, I like to take the trend line break out of it. That's a very high win rate trade for me. And it doesn't set up every day on the higher time frames. The higher the time frame, the more likely I am to take it. It doesn't set up every day on the higher time frames, but when it does, it set up yesterday on the hourly, and that was a really good trade. That was one of those where I was thinking I was going to get, like 5-8 points and then got twice that. And so I was just watching the chart, and then I went and looked at my P&L after, and I was like, ooh, that was a bigger move than I thought. And that's what happens a lot when I'm watching the hourly chart, because I'll see a bigger move develop, get in on the lower time frame. And I like that. Those work out nicely. This one is about to hit the profit, so we'll go over there.
Ooh, look at that. It is running.
This is after some stop outs on the orb though, so this is the way the orb trade's been lately. Like it does a stop out first and then it recovers it. But yeah, I've been there for the long haul in this one. It's a numbers game.
The big picture. So many good questions. Queen of Trades. Queen of Trades is in a long. Congratulations. Woo! W for Barbie, guys. Let's go.
Oh, there it goes. The NASDAQ one's still working. Get it trailed. Get it trailed. I don't trail it. It trails itself. Do it.
Do it.
There's a modification I want to make to the bot right here, but I haven't had time yet. There it goes.
What modification do you want to do, Barbie?
It's a little logic modification on how that trail works.
It's still running.
Oh boy. Yeah, we're over 30 points off of my missed entry on the other account. Oh well.
Go.
I'm gonna get it tomorrow though. I'm always extra determined after I miss one like that. The VIX is moving lower here finally. It was a little choppy, messy at open, and now it's just dropping. So that's really helping these long trades. Long trade for the win. Just didn't get my good entry. It's kind of a bummer, but
so good. Market is just pumping. NASDAQ is up by over 1.2%. ES is up by over 1%. We have these beautiful green candles on the 5-minute. She's running. What does a daily look like? I want to see what the daily. Ooh, child. She's looking pretty. Wouldn't it be wild if we just retrace that whole move from Friday? 1,230 point candle.
Really, we're just about there. I mean, we're over the 50 level, which is the level that we lost on ES. So this is pretty bullish here. If we get a pullback back
Almost
to the
there.
50 level, that can be a good entry for me.
Yeah, I was just reminding myself this morning that we're not that far away from the all-time highs. This morning, it was like 1.5% or a little less than that. I'm like, that's not far at all from all-time highs in the NASDAQ. She's pumping.
Man, I'm not even getting my pullback here. This would be like where I was looking for that pullback to happen. Come on, give it to me. No, it's like there's that
Oh
one.
my goodness. Woohoo! Let's go.
Okay, so we're at this is our new weekly high, but this was a weekly settlement, a prior weekly settlement here at 63. So fingers crossed that we get a pullback here. I can go long in.
Ooh, it is pumping.
But the 6750 target was my main target there. So
Hmm.
we're back into the chop range that we lost. So
Type in 1 in chat if you caught some of this long.
it is the taco trade. Who else is in calls with me? That's the big question. Oh my gosh.
Did you just
I just
look at your
looked again.
portfolio, your options portfolio?
Yeah. I mean, we might be having a 10% day on that account, which would be
Holy
amazing.
smokes. Profi caught some longs. Good guy. Smoke trades. 33 caught it. Thrive. Let's go. So will you start to scale out of those calls, Barbie? Or like how do you kind of handle that?
Yeah, we're getting into some of them are going for some higher triggers. We went over this a lot on my channel yesterday in the live stream where all these targets were when I was buying these. But so one of the targets here was this kind of 50 area, but I've got some longer dated that into November that I want to see. I mean, I don't even mind watching this come up and then lose a little bit of profits, but then move even higher. So I'll hold some position to watch that. I mean, some of these are only up 40% this morning. So.
Only.
And then the big one that we got in yesterday was Intel, but that's one that I'm looking to hold a lot of it into next week. So. Yeah, I was on this chart earlier because it's got it's got the line chart and it's got the tick chart. I keep calling it a tick chart. It's the tick index. I need to say that right. But we technically dipped below the 0 line on the tick index, but we've been holding these high levels pretty much all morning. So that's another thing here. This is where I can look. I don't have to look at all the stocks in the New York Stock Exchange. I can tell that in general they're pumping by looking at that chart.
And that's
I realized I had a video on that, but it was old and I took it down because I was going to redo it and I didn't. So I'll have to redo that one for you.
Yeah, that sounds good. That's considered a market internal, the tick chart.
It gets grouped in with the put call ratio and the advanced decline and things like that. So someone was asking which time frames I use, Emmanuel. The nice thing about using levels is it doesn't really matter which time frame you're on, but I do I see a lot of setups on the hourly, so I keep the hourly chart up. And then when I'm trading the morning session, I usually have this 5-minute up to, so I can really see in a little bit more detail what's going on inside of the hourly candles. But that was something that I just couldn't wrap my head around. I don't know why. I was obsessed with like what time frame chart are you using when I first started out? I was like, well, is the 1-minute time frame better or is the 5-minute time frame better? Is the 15-minute time frame better? Which is the best time frame? But the best time frame is the one that you can see what you want to see. And when you're in these little small time frame charts, you can't look left as easy to see where a lot of these highs and lows are. It's really easy to see that on an hourly chart. And since I'm trading levels, that's it doesn't really matter if I'm looking on it on the 5 minute or the 1 minute. On the 5 minute, I can get these little details. That's where I'll use the Mo roll because I'm watching to see how the lower time frames are rolling over. But when it comes to finding the actual areas of interest, that all comes from higher time frame.
Great question. Ash says, knowing thyself and doing what is best for yourself is the best time frame. Yes. Agreed.
What do I mean by levels? Key levels. So these are quants that are automatically calculated. But this morning I came and told you all the levels that I was watching. So that's what I mean by levels. It's just the price levels. So I'm watching highs and lows, and I have videos on how to come up with levels. They're some of my least watched, but most valuable, I promise. But the level, when I say levels, it's where the market stops and starts and makes these moves. It's the swing highs, the swing lows, the daily highs and lows, the weekly highs and lows. All of that's into consideration when I can zoom out and see where the market likes to stop and turn around. And these are the levels that I'm watching. It doesn't matter if I'm on the hourly or the 5 minute. The 6750 level is the 6750 level. So I can do my analysis up here, and I still watch this chart because it gives me really good perspective. But then I can come down into these smaller time frame charts, and I know I'm watching 6750. I just know I'm watching that, so I can watch that over here, or I can have all these levels on my chart too. I don't know where that yellow one's from. That one's just hanging out on this chart. But I have the 6750 hourly key level with lots of stars on it. So I marked that up for me to really pay attention to. I was on the hourly chart when I found that, but so I can really pay attention to it on the lower time frame 5 minute chart. I made notes on it. So, and this one up here that we're rejecting right now was a weekly settlement from a couple weeks ago, which is a level that was into play a lot when we were up in that range before. Oh, it's the 6767 level. That's what I marked in yellow.
That's why.
Should have been paying attention to it because we're a tick. Our high right now is a tick lower than that.
Yeah, so join us every morning. Make sure you catch us early in the morning because Barbie and Nick, they both share their levels with us and their analysis on the market Monday through Friday.
So I corrected myself a little bit earlier because I said when I was looking at this, I'm going to go to this other chart because it's a little bit bigger over here. I accidentally called this the tick chart because it's my tick index chart. So a tick chart is, instead of being time-based, these are time-based candles over here. And instead of being time-based, a tick chart is measuring each tick that the market takes. So it's going to look a lot different than a time-based chart. That's not what I'm talking about here. This is the tick index. It even says New York Stock Exchange cumulative tick index. And this is the one I need to make a video on. Chick charts.
Tick chart.
This isn't the chick chart. It's the tick index chart.
That's a tongue twister.
This is a way that you can get an overview. I mean, the heat maps too are kind of a way you can get an overview, but this one's saying just literally cumulatively all of the stocks on the New York Stock Exchange, every single one that's listed there. There's 2,800 something of them now. And when we're doing a plus and minus, they get a +1 for being gaining and a -1 for being losing strength. That cumulative number is right here. And so we can kind of watch to see. This means that in general, all the stocks have been bullish today. They're all in incline. They're all above the zero line, which means in general, the average is moving up. So that's one way that we can use that chart. We can also use it for extremes. That's one of the reasons I was watching when we first opened up at this extreme up here, this extreme high on the tick index. Usually we fall off of those. The extreme lows too. Usually we come back off of the extreme lows, especially if we open off of those.
NQ is still hovering around the new highs it made. The new high of day so far is 25,110. Are we going to go higher?
Someone was asking me about candle close. Do I wait for a candle close? That's when you start overthinking which time frame should I be on? Which time frame candle close are you looking for?
Hmm.
I get analysis paralysis doing that, so I don't do it. The other ways that I could watch, so I've got the Mo roll that's helping me see when the market's rolling over. I have the VIX chart, and this is the VIX line on this chart. I was telling you earlier, Nick's not here. He was kind of asking about this, but I got the pretty color indexes and then the bolder color for the volatility. Sometime I'll have the bonds on here too. But in general, a happy market, the indexes are going to move together and the volatility signals are going to move together. And these are the kind of things that I'm watching instead of a candle close. So I'm watching if we're rolling over. I'm watching the VIX to see what the VIX is doing. I'm watching how the other indexes are going. And then I don't have to try to guess if it's a candle close or not. I mean, usually you can tell without a candle close how aggressive that candle has been. I mean, you can just sit here and watch. Like if we wick down and then we're just spending all this time in the top of the candle, that's going to be a more bullish candle. If we're going really far back and forth, that's a really indecisive candle. Or if it's really small and doesn't know which way to go, it's indecisive. So you can watch all those sorts of things too. But then I can watch it while it's developing. So it doesn't matter if I'm watching a 1 minute or a 5 minute or a 15 minute or an hourly. I can watch how those candles are developing and I don't have to worry about them closing. I'm not trying to discount all of these strategies that wait on candle close. I know there's a lot of them and a lot of people make a lot of money off of them. But when I'm actually looking for those rotations at a level, I'm not paying that much attention to candle close because then I have to figure out which time frame I'm always going to look at. And I don't know.
Mm. There is a poll. Do you use any indicators? Yes, I have one or more I like, or not. Naked price action only. If you had to pick just one indicator, like you're on an island and you're only allowed one indicator, Barbie, which one would you pick?
I don't know, maybe just VWAP. I
Same.
don't think you need that much. This is a nice help because it helps me watch multiple time frames, but that was something as a newer trader that I was really frustrated with, like which indicators are best. That's which time frame is best is the question. Which indicator is best? And I think a lot of new traders, myself included, get real focused on getting a signal from those indicators. And that's not the way to look at it. You're not trying to get a signal from an indicator. You're trying to use an indicator to make it easier to see something that it's hard to see just through your regular chart. So that's when we're talking about oversold and overbought on RSI or something. We're looking to see that, but that's not necessarily a signal because I can pick on RSI. With RSI, you can stay overbought or oversold for a long time. But the way that you get entries is by watching for divergences, because at a point, if RSI, for example, is really super oversold and we start seeing a divergence where the ES is starting to move, or is still moving up, but the RSI starts moving down or vice versa, then we have a divergence. That's where the signal comes from. It's not just from that indicator giving a signal. And understanding that way, like if it's on my chart, it needs to be there to help me see something and not to clutter my charts up and make it harder to see things. That was a big light bulb moment and my charts got real clean. I actually stripped everything back. I had so much crap on my chart. I had bought all these indicators from Simpler and some other places because I'd taken classes at Simpler, and I just loaded it all to the chart. It's like the more the merrier. But then I found that wasn't it at all. I wasn't even able to take trades on that chart. So I ended up taking everything off. Every single thing came off of my charts. And I added back just the things that I was really missing. And I did find that VWAP was one of the first things that got added back.
Yeah, I saw quite a few people. VWAP is your favorite indicator. Relative strength indicator. Yeah, I have noticed, Barbie, how one of the ways that you use the different indicators is like it's giving you that information, the context, and if everything lines up, you're like, all right, green light, go. And then if things aren't lining up, you're like, caution. Who's at the top so far? Oh, Abhishek is number 1 for the XP. I'm number 2, but we can't win, don't worry. Tao is number 3. All right, type away, guys. Engage, engage, engage. MyFundedFutures will pick the top chatters later today to win a prize.
That's a good one. JC trade with some other method I've never heard of after that. After you get your TP, are you expecting a new trade or a new move? Or are you done for the day? It depends. So I kind of have I have blocked out the morning session as kind of my main time, and I a lot of times won't even trade before or after that. So if it's at the end of the trading session, a lot of the times these reversals, like this one I just missed, this long entry here, which ended up being more clear on NASDAQ, and I was watching ES, but whatever. If I had gotten that, that would have been like the big trade for the day. I'd be done. So, and a lot of times I do catch those. Today I didn't. That's okay. So in that case, I might still kind of look for a few smaller trades, but I would take them size down. But basically the way it works is I've got my playbook that I like to look for, and those the hot plays, like what I'm looking for at the moment, can change a little bit, and that's just based on what the market's giving us and what I'm personally good at executing sometimes too. But so I'll look for those plays. If they show up again later and I still have time before the lunch hour and there's meat on the bone, then I'll take it if it's a good setup. It's not like I'm just going to totally shut down, but I will, once I get a good trade, really relax and not say I need to do a bunch more. Like that's how it happened yesterday. Yesterday I was all ready to go look for another trade, and then I realized that first trade had done really well, and so I didn't necessarily need to. But it gets tricky on the same asset. Like we were trading OKLO, and I got in when we were in the 70s. And so my target was it was long ago. So I am out of that trade, and I haven't gotten back in just because I haven't seen a really clear setup for those conditions. If I had, I might be back in OKLO. I know some of our Discord got back in, but I didn't, because for me, I didn't see that clear re-entry. And I always have the perspective that there's always a new opportunity. Like in our Discord, we had a lot of people, because I took off this week. I had a lot of family stuff to deal with. And so the Friday drop, I missed it. And they're like, oh my God, I can't believe you missed that, Barbie. You're going to be here trading Sunday night, right? No, I'm not, because there's always an opportunity. And this is just the market marketing. And I've just gotten over that. I think there just comes a point where you have to admit that you're not going to get every single setup and every single trade, and that's okay. But at the same time, you show up and you just take those opportunities. So it could mean more than one trade for a day. It could mean one trade for the day. It could mean no trades for the day, but that's literally what the job is. So, I mean, if I get a good trade in, I'm not going to take another one unless it's good. I'm not going to just keep going because, oh, I had a win, so that was an A+ trade. Here's a C trade. I'll take that. Surely that'll work because that last one worked. You have to be real careful. That's when we get into that euphoria, when everyone's talking about the when you need to really take a break because you're in that euphoric. Nothing can hurt me. That's what you have to watch on those next trades.
I saw another great question. What's your best tip for resetting mentally after taking a loss that aligns perfectly with your plan?
You really shouldn't have to reset that much, right? It's like, oh, well, I traded. If you traded it right, then it's like, oh, that trade didn't work. Next one. Let's look for the next one. There shouldn't really be a mental reset unless you're over leveraged. So if you're feeling, if you take a loss on if you plan the trade the plan, and you take a loss, you just move on. And if it was too big, you're trading too big. You need to size down a little bit, because you can always build back up. That's the hard thing, is we want to push and get all these big profits. Like, we're ready. I know I'm ready. I'm just going to go for it. But we end up costing us more time in the long run trying to push leverage that we're not ready to take, because it really should all be about the trade and not the P&L. You shouldn't be trading your P&L. So you really have to be careful about some of that stuff.
Yeah, and perhaps fully accepting the idea that we are going to lose trades. That is just part of it. And it doesn't mean you're a bad trader. If you follow your plan that you set out and you're consistently trading that plan, then it's just, right? It's just another day. It's just another day. And maybe if you're struggling with kind of feeling bad or down about it, and it is making that mindset shift, there's something underneath that belief that's making you feel like bad about it, right? So if you can identify why is it that I'm feeling bad about something that I shouldn't feel bad about, there's a belief there. Maybe the mistaken belief is that every trade should work, or if a trade doesn't work, then that equals I'm a bad trader. And so it's identifying a negative belief that's getting in your way, and then working on changing that. MyFundedFutures says you cannot control if price goes up or down. You must submit to whatever it does, but you can limit your losses or let your winners run. This is entirely in your control and will affect the outcome. So true. Such a good reminder.
Someone was asking for an example of the trade plan. That's actually what Nick and I do every morning when we come on here, is kind of share our trade plan with you. So mine's really based on levels. And I know I don't want to speak for Nick's trading plan, but I know he's watching some key levels, and for some key levels to then get hit that trigger the long and the short. And it's kind of the same idea. And tune in for when we open, you'll see the trading plan.
Last minute thoughts before we head out for the day, Barbie?
Well, it's a little bit disappointing for me since I did literally just miss this entry because, oops, we didn't get quite low enough. But I was trying to go back to this. There we go. I got too many charts open right now. So the reason that I'm extra bummed about this is because my main targets are literally just hit right now. So someone was asking, what do I do after the trade? This is, even though I didn't get in it because I was off by 3 points on my entry. This is the move that I was looking for. So I kind of consider that move done. I'm not trying to get in on this plan anymore. I'm going to wait and kind of see what the next plan is. So is that a new swing high on the hourly that we're going to come back and make a new low and head back higher, or are we going to kind of recheck some of this? That's what I'm going to be kind of watching to see what goes on for the rest of the morning session.
Sounds good. Thank you, Barbie. And join us again tomorrow morning, guys. And make sure you come early to hear all of the levels and market analysis from Nick and Barbie. We will see you tomorrow bright and early. And please welcome Ash. Bye, guys.
Hey, good morning, everyone. Good morning, good morning, good morning. Good morning, and welcome back to another stream with myself, Ash Trades. How's everybody doing today? How's everybody's week going so far? Very excited to get back on here with you all. Let me just take a look at my camera a little bit. Why is it fuzzy? Why is my camera fuzzy, chat? Is that better? I think that might have focused it there. All right. How's everybody doing today? Another day, another chance to gain some more conviction in our business. Hope everybody's day is going well. Hope everybody's week is going well. Just going to take a moment to welcome everybody into my stream, and then we'll get into some of the information. Let's see who we have here today. As we're doing this, as we're saying good morning to everybody, throw a 1 in chat if you're green on the day, throw a 2 in chat if you're red on the day, and throw a 3 in chat if you have not traded today. Good morning, ICT Trader. Good morning, Fukra. Good morning, Ghost Rays. Good morning, Epictus. Good morning, No Askew. Good morning, KR Trades. Good morning, Trader Cody. Good morning, Lamb. Good morning, Felipe. Good morning, Gaber. Good morning, Cheater. Good morning, Wyatt. Good morning, NQ. Good morning, Licketh. Good morning, Dory. Good morning, Camillo. Good morning, Anubis. Good morning, Kay. Good morning, Muhammad. Good morning, Son of Wall Street. Good morning, Meep. Boars, good morning. Anna, good morning. Queen of Trades, good morning. Donna, how are you doing today? Bilo, good morning. Ricky, good morning. Trade Mindset, good morning. Mist Trading, good morning. Jenny, how are you doing today? Mr. W Trade, good morning. Rocky Mountain Trader, how are you doing today? Nikhil, good morning. Melvin, good morning. Abhishek, good morning. Tone, good morning. Beyond Consciousness, how are you doing today? Maya, good morning. Otis, good morning. Andy, good morning. Mr. Delusional, how are you? Michelle, good morning. Good morning or good day, depending on where you're from. I hope everybody's week is going well. I hope everybody's day is going well. See, we have a bunch of ones in here. Love to see that. Some threes as well. Couple twos. Majority ones. Wow. Very good job, chat. So what was it? Was it the longs? Did you guys capture the move higher this morning, or did you capture the move lower this morning? So throw an L in chat for longs or S in chat for shorts. What did you guys catch this morning? I'm going to go over my information any moment here. I'm just welcoming everybody into my segment. Want to take some time to be with the community, make sure everybody gets heard, go through some of the questions and conversations, and then we'll get into the information. How am I doing? I'm doing great. I'm very excited to be back on here. I'm ready to gain more conviction through experience. We were able to find our model once again. So it's another data point that we get to learn from. Another great day in the market, to say the least. Do you treat your funded accounts any different than your personal ones? Nope. I treat all of my trading the same. I need that kind of repetition to build the muscle memory. If I were to treat my cash account differently than my live account at MyFundedFutures, that's going to cause some confusion for me. So I really try to simplify things as much as I can. I don't want a lot of different moving pieces because it's just going to cause confusion. What process when you feel off, still trade or sit out? Anytime you don't feel okay for whatever reason, don't trade. I'm always going to be on the same side as risk management than I am euphoria or hoping or wishing for something good to happen. I would rather just not risk at all, right? It could be for whatever reason. You got to put the kids on the school bus, so you can't pay attention to the chart. Just don't trade. You woke up this morning and you got a little cold. You're not feeling very well physically. Just sit out. Don't trade. I would always take a 0 result, right? Being flat, taking no trade, having no result, $0 lost, $0 earned, then being minus $500 or minus $1,000. So anytime you feel a little off, in my opinion, I'd rather sit on the same side as risk management. Very good question. What's your process to rebuild confidence after a losing streak without forcing trades or revenge trading? We've had this conversation before, and it's the same answer. So it's going to sound repetitive. So for anybody that's been working with me for quite some time, I'm still going to answer these questions because I don't know whether you're new or not to the community. So I'm still going to go through this information each time. I've fully fallen in love with the process, right? So for me, I've completely detached all of my emotions from the outcome. So I treat a winning streak the same way I treat a losing streak. The thing that I'm doing is making sure I complete my process every single day. The result is a byproduct for me, truthfully. Okay, so forcing trades, revenge trading, that's how you know you're doing something wrong. Okay, it's not the outcome of one specific trade that makes it right or wrong. It's the actions leading up to it. Okay, if you've set a game plan and you told yourself that you're only going to trade one time per day, the day that you take 5 trades, you're breaking your rules. And it doesn't matter if you made a lot of money that day, you still broke your rules. It's not the outcome that matters. Okay, so I think the overall answer to how do I rebuild confidence, it's detaching my emotions from the result of a trade. I have no emotion about whether I'm winning or losing. I approach every single day with the same exact mentality. Show up, work the hardest you can work, complete the justifications to your actions, and stick to your process. Right? So, for example, my process would be I wake up, I make sure I get outside, I get some sun on the skin, I take a lap around the community, I make sure the blood is flowing, that I'm mentally and physically ready to even be trading. Then I come back, I get some coffee. That way my blood is flowing now. I have the energy and I'm at a level of being able to focus on the chart. I'm not tired, I'm not lethargic. Right? So these are the actions that I'm talking about in terms of a process. Then I come over to my communities and I start responding to everybody. I provide information, I provide charts, I'm acting as accountability for a lot of individuals. So I'm making sure that I show up every single day and having accountability. Then comes the charting. But notice how I didn't even talk about the chart yet. The process is knowing thyself. The process is making sure I'm in the right mindset, the right physical state, that I'm holding myself accountable, right? That has nothing to do with the chart. That has everything to do with being in the right headspace, right? Then I finally get to the chart. And when I get to the chart, before New York Open, I'm creating a bias. And if you want to see this process in terms of technical analysis, just go and watch the last 4 months that we've been on this live stream. You can see the process every single day. We start on a higher time frame and we get a bias. Then after creating a bias, then we look for a cracking correlation at a higher time frame level during the session. If we get that, then we go to a lower time frame and look for an entry function. So that's my process from start to end. And then the last thing, but most important thing, is your risk management, right? And I specifically said 1 trade a day for a reason. What I've done is I make sure that there's a limit on the amount of trades I take. Whatever limit you want to place on yourself is completely fine. I'm just sharing what I do. I'm not saying what's right or wrong. I'm just sharing my process. So I'm just sharing my experience in the market. If your experience is different than mine, then that's okay. I'm not saying what's right or wrong. I'm just sharing my experience. I set a limitation on the amount of time that I even look at these charts. I look at these charts between 9:30 and 11:30. Okay? That's the first limitation. The second limitation is the amount of trades that I take per day. Right? So I've defined my risk management on top of being in control of the mindset, the physical state, and the whole nine. So that's the process from start to end. I know that was a long-winded response. I wanted to make sure that I fully answered that question. Maybe I need to turn another light on. I think maybe the camera's not focusing properly because there's not enough light. Give me 2 seconds. All right. Hopefully that one does it. What keeps you grounded when things go well? I think I would answer that same exact question the way that I just answered the previous one. Falling in love with the process, allowing the results to be a byproduct, being in control of my mental and emotional state, fully detaching my emotions from the outcome. Do you think trading builds character or just reveals it? Both. Definitely both. So we're going to go through the information any second here. There's just been some really good questions that came across before I even got to the information. So I'm going to keep answering a couple more, and then we'll get through the information. But you can clearly see what I'm looking at here. I even put it into chat earlier in the morning during Nick and Barbie's and Terry's segment. I was looking for longs from the breaker block plus FEG. Or if you want to call it a breakout, it really doesn't matter. It's the same thing every single day. I don't know how many times I'll have to show this for everybody to realize that it's the same exact thing, right? We were bullish this morning. Therefore, we were looking for a breakout of a downtrend. We broke out. After breaking out, we then looked for the area that we broke out from to act as support for higher prices. Same exact thing as a breaker block plus an FEG. The terminology doesn't matter. We're all staring at the same chart. So we're always going to do both analysis because it's a fact. We are just watching price go up and down. It's not the way that you use terminology. So I'm going to keep going through the questions. There's a bunch of questions this morning and very good ones. So that's just a quick analysis of what we're watching here this morning. We will update the biases here in a minute. I know the routine's slightly different, but that's because chat is active this morning. Thank you all for participating. All of this information really builds a lot of repetition. So please do keep throwing more questions in chat. Let's keep going through more information. This is what builds the conviction, is obtaining this experience, gaining this information, and doing it on such a repetitive basis. Do you think price will get to TP at this point or consolidate? I have no clue where price is going to go. If anybody ever talks to you with a 100% guarantee, I would run the opposite direction. The fact of the matter is price can and will do whatever it wants whenever it wants to. There is a lot of randomness within price action, right? And we've been seeing that a lot recently, right? So let's go back to yesterday, right? Remember what happened yesterday? Guess what? Another Trump tweet, right? So we have no clue that Trump is going to say something about a trade deal with China. And then guess what happens immediately after the tweet comes out, right? So there is no predicting that. There is no predicting Trump putting his fingers on the button and clicking tweet, right? So if you believe that this is truly algorithmic, I would hope that you would take another perspective or look deeper into that type of analysis, because this is just Trump right here. Trump, once again, yesterday talked about China trade deals, and then we dumped because of it. Same exact thing happened on Friday of last week. Trump made a tweet right here about a trade deal, and look what happened. So there is no guarantee that we know exactly what Trump is going to do. The market is not just ran off an algorithm. There are other things that affect the market. So what I have to say about that is I accept the risk before the risk has been taken. Once the risk has been taken, I allow price to do whatever it wants to do, right? So this is what I can analyze, right? I've picked something that I'm capable of identifying, right? It's a swing low, a swing high, a new low, then a new high, right? Or a breakout of a downtrend, whatever you want to call it. I've picked something that I've been capable to identify on the chart. When I'm capable of identifying it, that's how I can measure my risk, right? So once I'm capable of seeing something, then once I'm capable of measuring my risk, Then I sit there and I make the choice. Is today the day that I'm willing to risk this amount of money right here? Right? If I enter right here and my stop loss is right here, the amount of money I would lose from here to here, am I willing to lose that money today? Yes or no? If I say yes, then after I get into the position, I no longer have any control. The only thing that you can control is whether you're willing to click the button or not. Are you willing to risk money that day? Yes or no? If you are willing to risk money that day, right, after you click the button, all of that, you have no clue what's going to happen after that. You can't tell the future. Nobody has a crystal ball. And so it's a matter of accepting risk or not accepting risk, right? So where price is currently, I can't sit here and say, yes, we are going to go here. That degree of certainty, I don't think that is a very good idea. I think it should be viewed in terms of risk management and allow the randomness of the market to happen. What happens, right, in 10 minutes from now, Trump comes out and does another tweet, right? We have no clue if he's going to tweet today, but what if he does? Stop loss, right? Like he without a doubt can come up with another tweet that goes and smashes price 100 points lower once again for the third time in a week, right? We can't control that. We have no clue if that's going to happen. Any advice? Oh, I lost the spot. Any advice? People who always hurry about funded challenges that stress me and always think that I can't pass in 1 month. Why are you setting some kind of expectation? Why are you setting some kind of time limit on yourself? Well, what is the reason why? Right? I would want to know your why, because your reason why is probably the thing that's forcing you to feel that feeling. Right? Instead of having, right? So for example, I'm not saying this is your reason why, I'm just talking about the question. A lot of people have some kind of financial need to get to the funded account and make money. So their reason why is the need for money. And that need for money causes them to do something they shouldn't in terms of risk management, right? So they size up too large and then blow the account. They overtrade and blow up the account because they have a need for money and they need that money now, right? I would say that I would challenge you to look at different perspectives, right? How about instead of making that need for money, right? Instead of doing that, let's change the need to you following your rules every single day that you show up to the market, right? If your rules are that you'll only take one trade per day, let's see if you actually only take one trade per day every single time you show up to the market from here on out. Let's see if you make a rule that you're only going to risk $300 per day, $400, whatever the number is. If you're only going to risk $400 that day, let's see if you only risk $400 every single day from here on out. Right? So I'm challenging you to change your perspective, change your reason why you're doing that, and instead of it being a need for money, like let's change it to a need to follow your rules. How many days in a row can you follow your rules? That would be my challenge for you, and I would love for you to come back in here in a month and say, for the past 30 days, I have followed my rules. So set a game plan today, right now, as you're working on your business, and then let's see if you can follow that game plan for the next month in a row. Right? So the rules, we can go over some rules now as well, so that everybody understands like how to create a game plan, right? What are those justifications that he's talking about, right? It would be first thing would be, when are you going to trade, right? For me, it's 9:30 to 11:30. Because if you don't set a time limit to your trading, then you're always going to think that there's a trade available, right? Futures are open for 23 hours of the day. Should you be trading 23 hours of the day? No, absolutely not. Like if you wanted a day job, then just go work a 9 to 5. You understand what I'm saying? Why are you even doing this if you're just glued to the screen? Like that is the same thing as a 9 to 5 job, right? Just go get a 9 to 5 at that point. Seriously. So first thing is set a limit to the time that you're willing to look at the charts. In my opinion, the best times to trade are the opening times, right? So New York open, London open, Asia open, right? So for me, since I'm in the US and I'm on the East Coast, New York open is what works best for me in my daily life. So my limit is 9:30 to 11:30. That's when I'm looking for trades. Okay. The next thing, the most important thing, would be risk management. How many trades are you allowed to take in one day? How much money are you willing to use per day? Once again, you can make any decision you want. I'm not saying what's right or wrong, but I'm sharing my experience. So for my experience, I only take one trade per day maximum. And I divide my drawdown by 10 to understand how much money I'm willing to use that day. All right, so divide your drawdown by 10. That's how much you're willing to use on one given position. And you're only allowed to take one position a day. Right now we have risk management in terms of time, right? Your mental state, your physical state. You're not ruining your physical state by sitting in front of a screen every single day. You're not ruining your mental state because you're so focused on one thing that you're not working on your health or your family. Now we're talking about financial risk management in terms of how much you would be willing to risk that day, how many trades you'd be willing to take that day. Right? Look at all the justifications to our actions that we're building right now. Then comes the game plan, right? How you interact with the market. And there is no right or wrong here, right? So you can come in here and say, the way that I'm going to enter the market is I'm going to, during my hunting hours, right? So 9:30 starts here, right? Here's the beginning of 9:30 right here. And 11:30 hasn't happened yet. But, right, we're setting those justifications to our actions, right? So from 9:30 to 11:30, the thing that I'm going to do to engage with the market is I'm going to find some kind of trend that I can analyze, right? So here is 9:30. So at 9:30, we start making a downtrend, right? Once I can analyze something that I can identify, right? Here's the downtrend right here from 9:30 until we break out right here, right? So now I'm asking, how are you going to engage with the market? We're still building out the game plan. How are you going to engage with the market? I'm not saying what's right or wrong. I'm saying you should find something that you can clearly identify that you can act upon. It doesn't matter what that thing is, okay? But I'm just using a trend line as an example, right? So here's a downtrend, and the thing that would make you engage with the market is when price breaks out of the downtrend, right? Now you just need to know how to measure your risk. In my opinion, invalidation would be here, right? If we're starting a new trend, we should not make a new low, right? If we were in a downtrend and we're starting an uptrend, then we should not make a new low. So in terms of measuring your risk, then you come in here and you say, okay, this is where we broke out from. This is where I would be wrong. Okay, so I've now built out an entire game plan, and I highly expect everybody else here to do the same. We talked about how we're going to get into the market. We talked about what would get us into the market. We talked about when we would get into the market. We talked about how much we would be willing to risk when we're getting into the market. There's the entire game plan. Now that you have a game plan, that's when you know whether you're doing something right or wrong, right? So every time you break your rules, you're doing something wrong. Every time you follow your rules, you're doing something right, right? So it's not a matter of the result. It's a matter of you following your game plan. And then it just becomes a personal decision at that point. At that point, it becomes a personal decision of discipline, consistency, patience. Are you really willing to make the hard decision to follow your game plan every single day, or are you going to fall into your impulses, fall into your emotions, fall into your thoughts, and break the game plan because you don't care that day? Seriously. So, very good question. I know some of these answers are very long-winded today, but this is what day trading is, right? This is quite literally what we're doing here every single day. And if you want to see what I'm doing, you could watch me do my game plan the same exact way for the past 4 months, because I've been live streaming right here in this community, doing that every single morning. So very good question. Very, very good question. Once again, I really appreciate your time today, chat. All the questions and information is greatly appreciated. We're having some really good conversations today. I know that we normally create a bias. After creating a bias, then we have a game plan for our session, and we look for a trade on a lower time frame aligned with that bias. But we do need to have this conversation too. So I understand that the routine changed a little bit here, but it's because you guys are providing so much value. The questions that you're asking are exactly what we need to know to actually create this business. And that's what we're here to do in this community, is to build out this business and figure out how to obtain this skill so that you have a source of money through trading. So very good questions. What's your approach to handling market noise versus actual signals? I'm a firm believer that, and I said this earlier, the market is completely random. We cannot control price action. We can only control our risk management. So, for example, this was the position that I've been watching this morning. All right, so right here, it's exactly what I pointed to when we first showed up. What I was looking at was this breaker block here with the FEG, and this was the reason why I was looking at the long position. And so in terms of market noise, right, I have no clue if we're going to go to take profit or not. I've accepted the risk, right? So the risk would be from entry to stop loss, right? This amount of room right here. I've accepted the risk, and whatever happens after this is completely out of my control, right? So if Trump shows up and does another tweet and it just sends us right to a stop loss, I can't control that. So in terms of dealing with noise, it's just accepting the risk and then allowing price to do whatever it wants to do. Don't try to analyze every single price fluctuation. You can't control it. It's going to do whatever it wants to do. Do you think simplicity or complexity wins in trading long term? Simplicity, without a doubt. For example, let's do the complexity first, right? So imagine you had a checklist that had 25 different things that you needed to check off before you got into a trade. I'm telling you that you'll have so many less trades than you would if you only had a checklist of one or two things. You'll never even trade at that point. And what are we here for? We come to the market because we want to risk money. You need to risk to get a reward. So if you never risk, then you'll never make any progress. So I on top of just having clarity, I think simplicity brings clarity as well. A lot of people fall into information overload, right? So if you have 25 different things that you have to check off, it'll be much easier to get confused compared to only having one or two things. So simplicity would be my answer for that one. Very good question. Once again, you guys are on fire today. You guys are the ones fueling this move higher, aren't you? With all this fire that you're putting in chat. Thank you, thank you, thank you. It's interesting how mindset shapes results more than charts sometimes. This is also another great statement for this one, but we've had many examples and we've talked about this many different times. And my example here for how mindset drastically changes results is the individuals that get scared to hold a position, therefore they move their stop loss up to break even because they need some form of protection because they're scared to risk, or they think they're protecting themselves. Those are usually the individuals that get stopped out for break even. And then it moves in the intended direction. Okay? So the simple understanding of your thoughts and your feelings can drastically change the results without a doubt. Ash, do you use macro times? Macro times is not a real thing. So no, that is not something that I focus on. You could just say the open and close of an hourly candle, right? So that's just a different terminology that people use. You're just talking about the open and close of an hourly candle. Do you think mental preparation is important as a technical prep? Without a doubt. Yes. That is why I go outside and I walk. I get some sun on my skin. That is why I make sure I have my coffee. That is why I make sure I do my accountability steps. Without a doubt, I truly believe that this business is 80% mental and 20% chart. Yeah, I know what you're talking about as a macro timing, and I'm telling you that a macro is just a different word for saying an hourly candle opening and closing. It's the same exact thing. I know exactly what you're talking about. How do you separate emotions from decisions when things go wrong? I'm not going to, that's going to be the same answer. So you guys are going to think that it's repetitive. It's just detaching your emotions from the outcome. So find a way to detach your emotions from price action, from the outcome. Ash, protein powder or chicken? I'm definitely going with the chicken. That real protein. Can you please help us understand how to identify a breaker block? Okay, a bullish breaker, okay, it's going to be a swing low, it's going to be a swing high, it's going to be a new low, then it's going to be a new high, okay? This right here must be a swing low. This right here must be a swing high. This right here must be a new swing low, then a new high. These are swing points, right? So a swing low is a 3-candle pattern where the first and third candle have higher lows compared to the second candle. Same exact thing, but vice versa for swing highs. Okay. Next thing to understand that, oh, what just happened there? That was the wrong thing. Next thing to understand that is that you need to have all 4 of these institutional swing points for it to be considered a breaker. Okay. So you cannot have, ooh, that should be a 4. Right, so what I'm trying to say is this is not a breaker, right? This would be a higher low compared to the initial swing low. It must be a swing low, it must be a swing high, it must be a new low, then a new high. Okay? Next thing to understand is that in between the initial swing low to the initial swing high, so in between point 1 and point 2, that is where you're going to find the breaker. Okay, the breaker, the bullish breaker, is going to be the highest up close candle in this leg of price action right here. Okay, so let's now take that definition and go to price action so that you can also see it within price action, right? So let's take a look. Right, I highlighted these two candles because that is the breaker block. And now let's define everything that I had just stated, right? So you must have a swing low, you must have a swing high, you must have a new swing low, then a new high. So we do have all 4 of the institutional swing points, right? So now we will identify the swing points with, right, here's the first swing point, here's the second swing point, here's the third swing point, and here's the fourth, right? And I told you that in between number 1 and number 2 is where you'll find the bullish breaker. Okay, so the bullish breaker is always going to be the highest up close candle in between the initial swing points. That is why this right here is the breaker, right? So when I annotate the breaker, I'm annotating the entire candle, right? The reason why I'm annotating 2 of them is because there's consecutive candles in a row. Okay, when there's consecutive, you use both of them. When there is not consecutive, then you only use the highest up close candle. All right. It becomes a breaker once price goes above it. Price made it through the breaker here, right? That is when it became a bullish breaker. Okay. So that is your explanation of a bullish breaker. It is just vice versa for bearish breakers, right? So it's I'm not going to go through the full thing, but it's the same exact thing, just opposite. Swing high, swing low, new high, new low. Bearish breaker will always be found right in here, right? The initial swing high to the initial swing low. So if you need more information than that, I mean, that is quite literally what a bullish breaker is. But if you need even more information than that, go right here. This is my YouTube channel right here. @_Ash_trades_. And there's also a free playlist there called the Unicorn Model. Give me 2 seconds. Let's continue to keep going over information. I'm just going to take a quick sip of water, and then we'll get to the next question. All right, now for the next question. Everybody keeps asking when to enter. You have multiple different entry opportunities, right? So here you go. This is where you become an independent thinker and you choose what works best for yourself, right? So here is your first entry, right? You are market ordering or using a buy stop as price goes through the breaker, making the breaker block. And yes, it would still have the FEG here. So all of your concepts are confirmed as we're breaking through the breaker. This is your first opportunity. Either you're market ordering here when it initially breaks through the breaker, or using a buy stop right here as it initially breaks through the breaker. That is your first type of entry. Okay. The next type of entry would be waiting for a retracement back to the location that we enter from to then get long. Okay, so either one works. It's your decision as a trader to choose what works best for yourself. Now, obviously, there's two different results here because the person that market ordered in here was able to catch the long and got some nice profit. The individual that waits for a retracement back to the breaker never got an entry. Right? So you see the two different outcomes there. Now, once again, I'm not saying which one is right or wrong. What you need to do is go collect your own data. Go do this for the next year or two and see which one you're better at executing. Right? Are you better at market ordering in on the initial break? Are you better at waiting for the retest? Collect your own data so that you can build the muscle memory to understand how to execute it. Right? So there is no right or wrong. It's a matter of you collecting your own data and putting in the work to build the muscle memory for yourself. All right? How to collect data? Show up to your hunting hours every single day from here on out. You want to be a trader? Show up to the market open every single day. That's how you trade, right? So each day you should be journaling what you think, what you see, what you feel, what was the results to that information, right? Then when you've done that for a year, 2 years, 3 years, then you've, one, built the muscle memory. Two, you have an undeniable stack of proof. You have so much data that is yours. It's nobody else's. It's yours. You put the time in. You put the effort in. You put the focus in. That's how you build the muscle memory. That's how you build your conviction. Conviction is built through experience. Right? If you want to be a day trader, then show up to the market every single day. So, very good question once again. So we kind of changed up the routine today, but I do want to still complete my information. Thank you everybody that has been participating today. Phenomenal information. Really, really good questions. I really appreciate your time. I do only have 15 minutes left here, so I do also want to make sure I update my information because we have a process here. We have to make sure that we stay up to date with the information. So let's get through the biases. We went through our weekly outlook yesterday, so we need to update our biases. We need to stay up to date with the information. So let's make sure that we complete our justifications to our actions as well. Starting over here on Euro, let's take a look. So Euro, we were looking for higher prices. Okay, you can see it right here. I left the analysis on the screen because this is the weekly outlook that we had for Euro. It was very simple. The weekly outlook is price swept a swing low. Since price swept a swing low, since it closed back inside the range, we were looking to see if that area could provide support for higher prices, right? So we had a bullish bias on Euro, and we said that we were going to target previous day highs. Very good start to the week for Euro. We did go and take out these equal highs here, so our first target has been completed. We came extremely close to our second target here. So the bullish bias was correct. Very good move to start the week. We'll see if that continuation could occur. I would want to see us target this one next, here, and then here. So bullish still for euro. Very good job on that weekly outlook. We got a small move higher. We'll see if we can get some continuation to the next set of previous day highs. Very good job. The dollar, we were looking for a move lower, and we got it. Another beautiful bias. We were looking for a move to the FEG. I did document that incorrectly. That is a bullish FEG, not a bearish one. I used the minus symbol for bearish. I used the plus symbol for bullish. Just a quick reference. But we were looking for a move lower, and we were targeting this FEG here. So far, we got a nice move lower. Good job moving towards target. We'll see if they can complete the target. We'll see if they can fill that bullish FEG. So very good job so far to start the week. Oil, we were looking for higher prices if the candle closed back inside the range, in which it did close back inside the range. So we will be targeting here, right? We did not get that move yet. We tried to make a move higher, but this just looks like consolidation because we are just within the previous day range, right? This is just an inside day here. This is just showing that it's consolidation so far. So I wouldn't call this bias correct. I would not call this bias incorrect. I would say that we have not gotten the result to it so far, that it has just consolidated. Okay. NQ and ES, we were a bit unchanged. We didn't exactly have a bias for NQ and ES. I'm not going to say that this was right or wrong. If I remember correctly, the exact statement is that I was not willing to have a bias. The reason that I was not willing to have a bias is because there was a lot of fundamental information that was happening instead of technical information. What I mean by that is Trump making decisions upon trade deals, right? That is something that is fundamental for our economy. Okay? So there's a difference between a fundamental analysis versus a technical analysis. A technical analysis means you're analyzing something that happens on the chart to obtain your information. Right? So what I had stated for NQ and ES was that I don't have a clear bias, that I would wait to create a bias because there's a lot of fundamental things that are happening right now. Trump making decisions upon, our economy is changing the way that price moves. And that's not how I create a bias. So that's why I did not have a bias for NQ and ES. Now, what I'm pointing to here is the technical analysis. This was a nice move. We swept the swing low, and then after the sweeping the swing low, we then targeted the FEG there. So in terms of technical analysis, a move from the swing low back to fill the gap, that is what technical analysis is. So that was a nice move, but there's no credit to take there. We did not point to that. This is hindsight. Chat, I missed it. Hopefully you guys didn't miss it. Looks like there's a code on the screen there. Take a look, chat. Who was able to get one of the codes? Throw a W in chat if you're able to get one of the codes. Throw a W in chat if you're able to get one of the codes. Congratulations to the winners. Another day, another giveaway. Let's go. Let's go, chat. So just a quick update on the biases. Make sure that we're staying up to date with the information and our game plan. The other thing that I wanted to point to is this right here. This was a beautiful move. We had talked about yesterday, we had talked about flat candles being a good point of interest, whether starting a position there or looking for a move to that location. Well, guess what they created here, chat? Guess what they created at this location? Right? So here's your weekly open. This is a flat candle. At the flat candle, you get a swing low, a swing high, a new swing low, then a new high. This is another beautiful example of a breaker plus an FEG. Absolutely amazing. This is exactly why we use this type of entry, because a breaker plus FEG a lot of the time is the reversal. A lot of time is the reversal, and this is an example of it. We got that same reversal on both NQ and ES from the important location, the flat bottom. You get a beautiful breaker plus FEG on both of them. It ends up being the reversal to then target the highs. That is just beautiful. That's beautiful. That's beautiful, chat. And this is quite literally what we pointed to yesterday. Right? So if you go back and watch yesterday's stream, what was the position we were watching? We were watching this right here. Right, again, a swing low, a swing high, a new low, then a new high with an FEG. Who remembers this, chat? Who was here yesterday that, you know, was watching the longs with us? Do you mainly trade reversals? No, this could be a reversal or a continuation, right? So, for example, this is what we were watching yesterday. This is a reversal, right? We were moving lower, we were moving lower, we were moving lower until we made the reversal, and then we started moving higher, right? So that same exact position can be found right here, right? So now we're moving higher, we're moving higher, we're moving higher, we're moving higher. And then as we're moving higher, we look for the same exact position right here, right? So the type of entry function that I use can be a reversal or a continuation, right? So no, I do not identify myself as a reversal trader. I do not identify myself as a continuation trader. I do not identify myself as an ICT trader. I don't identify with anything. If you want to say anything, I trade the market is what I would say. I show up and I trade, right? So no matter what you want to call it, what I'm doing is I'm showing up to New York Open to risk money, to make money is what I would call it. And I'm looking to trade a certain dollar amount for some kind of reward or loss, right? Because the fact of the matter is right, like, call this whatever you want. I've been trying to say that for a long time now. It's not the terminology. It's the logic that you provide to your decision making, right? Like, stop calling this a breaker plus an FEG because this is just a breakout of a downtrend. You know what I'm saying? Like, it's not, call it whatever you want. It doesn't matter what you call it. That's not the point that we're here for. I don't care what you call it. I don't identify with anything. What I'm trying to do is I'm trying to risk money to make money or lose money, right? So what would you call this? So like if we were trading this downtrend, it broke out of the downtrend and we got long, what would you refer to that to as? What would you refer to that to as? Just a breakout of a downtrend. Buying low, selling high, right? Buying from support. Maybe it's support and demand, right? Or support and resistance. Here's the support here. you would then sell it at resistance here, right? Breakout, support and resistance, breaker block plus FEG, whatever you want to call it. Again, it truly doesn't matter. Buy the dip, yeah. Buy low, sell high. Buy fear, sell greed. So that's what we're doing here, chat. We are going to continue to keep showing up, working and learning, gaining conviction through experience. For anybody that wants to work, for anybody that wants to gain more experience, anybody that wants to continue to keep trading with us, that's what we're doing here. So please do keep showing up. I think all of these questions and information are truly valuable. We get so much experience from it. So I don't care what you call it whatever you want. But if you want to work with other like-minded professionals, that's what we're doing here. That's what I would say we're doing. If you want to work with other like-minded professionals who are looking to achieve a business through day trading, that's what we're going to do here. No matter what you want to call it. What an amazing session. Chat, I give you guys all of the credit. Just the answers, the questions, the information. You guys really hit the nail on the head there. So thank you. That was amazing. I honestly feel like that was one of the better days that we've maybe ever had. You guys were asking all of the right questions. Amazing. How do you manage entries on NQ during volatile sessions without getting wicked out? You cannot control whether you're going to get wicked out or not. You can identify how to get into the market. You can then measure your risk management. And then once you take the trade, you've given away all control. So for me, right? So the way that I measure and identify, I look for a swing low, then I look for a swing high, then I look for a new swing low, then a new high. Once I get that pattern, right, then this is how I measure. I measure from the beginning of the breaker to the swing low. So that's my measurement of risk, right? So all you can control is how you enter the market, when you enter the market, and your risk management. Once you've accepted the risk, right? So once you can identify this, once you can measure it, then you sit there and say, am I willing to risk that amount of money today? If you say yes, then you click the button. After you click the button, you no longer have any control, right? Price can and will do whatever it wants, whenever it wants to. So how do you not get wicked out? Just don't take the trade. Because if you take the trade, you have no control if you're going to get wicked out or not. So volatility has nothing to do with that. Your process stays the same. You fall in love with the process and you allow the outcome to be a byproduct. You can't control whether you're going to get wicked out or not. So accept that beforehand and either decide to take the trade or not. But it does look like that's the end of my segment there, chat. What a phenomenal day. What a phenomenal day. Thank you all for your time. Let's go ahead and throw a bunch of W's in chat for Tom. Stick around for Tom's segment. He's got a lot of value to share with you all as well. I will be right back here tomorrow. So if you want to continue to keep relentlessly working and learning every single chance we can get, continue to keep showing up. Let's continue to keep gaining conviction through experience. I will see you all tomorrow, and let's hand the mic over to Tom. Have a nice day, everyone.
Hello, everybody. It's good to be back again. Welcome. W's in the chat for Ash, everyone. Thank you so much, Ash, for the great session again. Cannot say that enough. Always lots of value, everybody. We love Ash. A true professional trader. That's it. I mean, what can you say? A real pro. And that's true. A pro trader. Absolute. I told you guys that I rarely seen anyone with more discipline that he has. So lots of things to learn. Thank you again. How is everybody doing? So good to be back. We're going to finish up with yesterday's topic, by the way. We're going to finish up with yesterday's topic. Guess what it is, right? So hello, everybody. Special hello to the mods. Abhishek, Danny, Magnus, and if I left anyone out, then hello to everybody. So how's the day? Ricky, hey, what's up? Hope you guys printing money. Profits, you know. I would say like profits because until it's not on your account, it's just numbers on the screen, right? But hey, how's it going? All right. I see everybody's printing. All right. If some of you are down in the red, don't worry about it. It's still fine. It's still all right. You can make it back. We still have a lot of time. I mean, we have Thursday, we have Friday, but you know, the day so far for me is extremely good. Again, locked in some profits. You know, so looking good. This month should be better than the previous month. And the previous month, though. So better. What happened? Adam, down? What happened, man? Come on. You can share your winners. You can share your happiness. You can share your sorrows. Everything. That's why we're here. You know, the best trading community. And by the way, please push that like button. Subscribe to the channel if you haven't already. If you're just lurking and watching in the background, hit that subscribe button. And please hit the like. Yeah, the chart is looking spicy. I'm going to tell you guys some stories about this chart because it has a lot to say. I can't wait for it. Raphael, what's up? Almost, yeah. Help me get a core. Okay, we'll make a deal later. Son of Wall Street, you're done for today. Nice. All right. Yeah, there was some setup, so I'm gonna talk about this. Like we're gonna do a quick recap as usual because if some of you guys like these zones that I'm using, I think you will like what happened so far throughout the London session and the New York Open. And there's again more and more proof. You'd like the stream, sorry. So there's more and more proof that there is something in these zones that I like to follow, you know, leak the sauce. I will, don't worry. So there's something in this, the market definitely respecting these levels. And I'm going to prove it to you right now. Okay. Let's go, Nick. Exactly. Yeah, we have NQ getting lower here. And now, okay. Okay, before you do anything crazy, there is a demand zone that's being created after the market open. I switched down to the 5-minute time frame. You can always see which time frame I'm at in the down right corner. So I'm on the 5-minute time frame. It's the micro, but don't worry about it. Here, this candle, let's observe it. Okay, it's valid. So this is a valid demand zone. All right, 5-minute, and this just I totally forgot about this. 5-minute demand zone. Now, why do I say this? And I love bringing up these examples because this is the bread and butter I'm using. Okay, this is everything. This is the main thing I'm doing every single day, no exception. So this wick here swept some lows here. Look at that. Boom. Here was the liquidity sweep right there, and then strongly pushed the market higher. Look at the market structure shift here. And we're still on the 5-minute chart. I just love this. Guys, this is awesome. Market structure shift there and there. I'm not going to put everything out there. Now, the zone started right here, opening up this candle, the bearish candle at 9:45. Perfect textbook example, guys. Textbook. Yesterday we had a textbook example. Now we're going to have a textbook example. So everybody sit back, relax. Actually, get your notebook and note this down. Do the screenshots. Textbook example. Opening is 491.50. All right, on the micro of this candle, 491.50. And there it is. Unfortunately, the move was very fast on this one. Textbook, baby. So now we're at 73. I think there's like a very strong chance that we're going to tag a 941. If I would enter this trade, I would wait for a fair value gap with a retracement. Now, this was a particularly hard entry. If you want to chase it, I strongly advise not to do so. Now, if you would enter on a market entry right now, look at the 1-to-1 risk to reward ratio. You're still good if you put your stop up there, somewhere around above 25K. Look at that. If you're entering aggressively on this one, if I would enter, but I'm not gonna because I made my profits for today. If I would enter, I would like to wait for this fair value gap here. And this is the 1 minute chart right now, as you've seen it down there. I would wait for this 1 minute fair value gap to be repriced and this next fair value gap up there, right there. So I would put a limit order if I want to play it safe. And the 1-to-1 risk to reward ratio is right there. Look at that. It's not so bad eventually. That's it. That would be my entry if I would trade this, but I'm not going to. And this is not financial advice, all right? Setting up a bullish run, it could be. It very well could be. Again, it could just, do a V-shaped recovery to the upside. Who knows? It can also go higher to reprice that gap and maybe even that one. So it's already looking bad. Okay, pretend that I never said anything. So, but it's still like amazing how this demand zone got created here. Even if it goes higher, I wouldn't be surprised on a drop, at least down to that. Early profit taking could be happening on this fair value gap at 951. So got to watch out for early profit taking somewhere around 945-ish area. I'm not trading this. I'm just saying that this would be something I would be looking for. What time it is? Well, still below the lunch hour. You forgot already. All right. And if we look at the recent, so if we look at the whole move, by the way, and this is where the FIB tool comes in handy. Let's look at this 3-minute chart. It's fine. So the 50% retracement level would be up there. It's not accurate, but it gives us something to look at. And that's it. That would be the 50% retracement level on this swing. Let's see what happens. I'm going to be curious about this, by the way. Well, effectively, I'm not really using the FIB tool. Like, I'm not really trading with that. I'm just looking for the 50% retracement level. And basically, that's it. That's what I'm looking for. All right. Usually, that's what I'm looking for. Very interesting price action, that's for sure. But I just love this. Whatever the market is going to do now, because we're approaching the lunch hour, this 5-minute demand zone, maybe for the PM session, maybe for the Asia session, is going to be interesting, that 941. Okay, let's just keep that in mind, whatever the market decides to do right now. Okay. But it's rare to see this kind of movement as we approach the lunch hour. So I'm just saying. Do we want to follow this move? Wow. Okay. 947. So again, if I would be trading, this is the one I would be taking as a trade. And even if it goes to a stop loss level up there, my stop loss was somewhere around 20, somewhere around that FIB level. It is what it is. But as I said many times, as long as you have the range, as long as you have a positive risk to reward ratio, it can be just a 1-to-1, then you're good. Then you're definitely good. So to refine your entry, you can do like two things. You can add a position here and maybe higher, but I strongly recommend not to add more to the position. Now, as we approach the 40s, my TP would be at previous day high somewhere at 47-ish. Because I told you guys, now we tagged into this fair value gap, there's a very high chance that we're going to see a bounce all the way up there. So, what you can do is, and that's actually 83 down, that's 20 points. What you can do is, I don't know, close a partial. Let's see if the 47 is going to get tagged. What do you think, though? We get all-time high this week. What's your opinion? There you go, 47. We got it. 47 TP. Okay, nice. 47 TP got hit. So are we going to get a new all-time high? I don't know. It's hard to say. I'm expecting more decline in the market. I like to see more decline, although I think ES is going to be the driver again, because ES wants to go to 7K. You know, ES wants to go to 7K. And that's it. And I'm just actually very grateful and that I could show you guys this example. If some of you guys are following me on my YouTube channel, this is up there on the upper right corner. You know that I usually take profits a few points earlier than the actual level. So the level is at 941. My TP is usually at least a few points earlier. So my TP would have been at 47. That's a good level in the middle of that fair value gap to the left. So this is actually, for me, I'm so happy. Guys, I am so happy for the chat and for MyFunded TV that I could show you this, because this is exactly what I'm doing every single day. This is exactly what I need. You need the target. My targets are the demand and the supply zones. And all I need is a pullback or retracement into a fair value gap, and boom, done. That's it. That's it. I don't want to put on like 12 different things on the chart and like super overcomplicate, like, oh, there's this and there's that. No, as soon as price starts to move and we have volume and momentum in the market and we have displacement in the direction of the target, we have displacement with fair value gaps, boom. All I'm looking for is to optimize the entry with the proper risk to reward ratio. And that's it. That's how simple it is. Keeping it super simple. Anyway, let's move on. Yeah, this is actually the only thing I do here. So let me get this line off here. We are there. Yeah. It was a nice one. This was a nice one. So, absolute. Come on, don't say that, Coop. Coop, by the way, I forgot. Yesterday I saw your comment on Twitter. I misread it, by the way, but I got the idea later then. Yeah. What's the time of right now? It's 5:45 p.m. right now. 5:45. So YM easier. I'm not trading YM. I traded YM when I was trading CFDs, but nowadays I'm not really trading it. And by the way, look at the reaction. So let's just analyze what's happening here. I'm sorry, we're going to go to today's topic as well, but I'm just so excited. Look at the reaction on this level. Look at how the market reached the demand zone, and it didn't just cut through. Like usually this is what we see. It made a small bounce here. Even if it goes sideways a little bit, the more time it spends on this level, that's going to show us that this demand zone is respected, at least for now. But there is something here. What I'm trying to express here on my end is that if you got the level right, which we did this time, you're going to see that the market is quote unquote reacting. Maybe it's not going to respect the level. P&L today, I made about 1,200 unfunded accounts. But, it's good for me. For Matt, it's pocket money because he makes 20K a day, but I made 1,200 unfunded accounts. I'm good. So this one just actually shows us that the market has some sort of a reaction to the level. Maybe it's not going to respect it. And usually what I say is that zones are meant to be broken. You guys hear me all the way saying that on my channel, like zones meant to be broken. So sooner or later, I like to see the market go through. If it's not going to go through now, it might just, that's not mandatory. But look at the reaction right now. So the market is definitely reacting to this level. Now, let me show you an example and stick around because you're going to be amazed on this one. You're going to be absolutely amazed on this one. And this is going to be my ultimate proof for you guys that my zones, my algorithm, these are my zones, my algorithm. I coded it. I'm the market maker. I'm the ghost in the machine. Me. I, me. Okay. So I coded it. I made this. Okay. I coded this in the market. All right. So this is a textbook level here. Let me see. Monday. Yeah, this is Monday. This week, Monday, Asia session. This is a good example. I'm zooming in on the 5-minute chart, Monday Asia session. Look at this bullish candle at 1040. Okay, 1040 right here. What's it doing? Look at what's it doing? Look at that. I know it's just a bearish pin bar, but it's a bullish candle, and this one too. It's picking up liquidity. yeah. Sabotage concepts. I'm sorry. I'm sorry. I'm just a little bit crazy. Sue me for it. So anyway, these bullish candles pushed into liquidity. I've been trading since, well, it's a long story. I'm going to tell you that. I had a bad run since 2018 to 20, and then restarted at 21. So, oh my God. I love this question. I have to go to the barber, by the way, next Tuesday, just to say, next Tuesday, I have an appointment at my barber. He went for a vacation or something. I was like testing, like, hey, man, where you at? And he's like, oh, I'm on vacation, dude. And I'm like, hey, I'm going to look like DiCaprio in The Revenant. What the heck am I going to do? I don't know. I have to do something. Anyway, bullish candles. Let's keep the focus, everybody. All right? Keep the focus. Bullish candle pushing into this liquidity. And then look at the strong move on Monday Asia session. No, unfortunately, Hungary does not have a good football team. So look at the shift here. Bearish market structure shift, pushing. Look at the strong push down. Wow. I would say that this level, and we're still on Monday Asia session. Look at this. Boom. It doesn't really get any better than this one. So let's go to the right. It's Tuesday. Look at how close it got. It's Tuesday. Let's go through Tuesday. Tuesday. Oh, would you look at that? No, anyway. London session today is where I wanted to come up with. Today's London session, I actually called this trade out and I took it. 5-minute supply zone. The same supply zone, finally, as we extended it to the right, got tagged. Now, what I like about this move, there was an accumulation, and this was today's, again, London session, all right? Today's London session, accumulation, then it started to go higher. The entry on my end was based on a little bit on a discretionary note with a small risk. We're going to talk about that too, like why take a discretionary trade. That's going to be a next topic. Actually, I have to write it down. Because I'm going to forget it. Why discretionally? Why this discretionally trade? I'm going to write this down so I won't forget it for tomorrow. So, look at the reaction on this level. Look at how the market went into that 5-minute supply zone and immediately got rejected. When I see this, I look at the reaction, what the market is doing. Now, this is not random. This is not pure luck or just guessing or something, as ICT would say it. Not that anyway. So this, what I like, this reaction, it proves me that that 5-minute supply zone was absolutely valid. And wow, the current 5-minute demand zone got completely destroyed, as Ben Affleck would say it to Barry Allen in the new Flash movie, is you're going to destroy everything. So now it got destroyed. Okay. Actually, not Ben Affleck, but Ben Affleck plays Bruce Wayne. He tells Barry Allen, you're going to destroy everything. It got destroyed. Okay. We have a London low at 868. I don't care about that, by the way. I don't trade for these levels. There you go. There you go, Brosson. So I have notes. Guys, look at my notes. Look at this. I'm going to prove to you. Look at all the notes here. These are notes. Okay, one note. It says VWAP. I don't know why. It says Ben Raphael. I don't know. This is something else. Buy milk. Okay, that's that. And discretionary trading. So that's it. These are the things. You can't see. I just told you. So what I want to say is Borscht. Okay. Oh, okay. Okay, Borscht. All right. Buy milk. Yeah. Okay, so the zone got destroyed. Now, what I wanted to prove to you guys on this one, and this is why I got so excited. It was amazing to see how the market reacted in this London session to that 5-minute supply zone. This is, again, a proof to me that there is something in this concept. My concepts, I created it, I coded it, I created the whole thing, okay? The market makers just copied me and they put it in there. I don't know how. I did that. All right, let's stop the foolishness now, okay? Let's take it serious. So, the reaction was good, and now the demand zone was absolutely amazing. The whole reaction, again, if I go down to the 1 minute, I'm happy to see that as soon as the market reached that level, look at this top here for a few minutes, like up, we reached that level, guys. You know, candles are talking to each other like, hey, look at that. We're here. What should we do? I don't know. Call up the market makers. Okay, blah, 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 let's go. So this is what happened. Kind of crazy, I know, but I like the reaction here at this level. Thank you. Oh, anyone win? I'm the founder of Smart Tom Concepts. I love that. STC. Yeah. So anyway, the reaction. I'm so happy that I could show you guys the example on this one and live here at MyFunded TV. This was just awesome. I'm very grateful for the opportunity. That this was a great example. I wish I would have these trades earlier throughout the day. In London would be the greatest time. But this was a difficult one. And we're going to talk about why sometimes we put on these discretionary trades. You know, we're going to talk about this is a great idea for next time. All right. This is a great idea. So I'm sorry I wasn't really following up with the chat. I'm the artist. No, I don't want to troll. I'm sorry. And by the way, at this moment, I would like to apologize if I hurt anyone. I did not want it to be harsh on anyone. I mean, I love ICT lectures as well. I respect him, learned a lot. But sometimes I just like to goof around. So I apologize if I hurt anyone's feelings there. You know, trading is boring. And, you know, we're here at MyFunded TV. Awesome community. Keep that in mind. We got to pump those vibes up. We're not here just to, look straight ahead and, yeah, next candle. Oh, we're closed bullish. Okay, let's wait. Okay. Oh, there's a bearish candle. Okay, let's wait. No, that's not why we're here. We're here to to gain some knowledge, to share information, all right? To share experience, actually. And you know why? Yesterday I told you if someone remembers, there was one word yesterday why we're here. We are here for the energy, okay? And for the hug, of course, to hug each other. Yes, so we're here for the energy. All right. Okay, so I am so hyped up because we could see these things. That is amazing. Just a quick look on gold before we change the subject here. Okay, gold, nothing. Again, another interesting thing. Look at that. Just a quick example why we're at it. 5-minute demand zone. I'm not going to do the detailed analysis here. Absolutely valid. If you look to the Asia session yesterday on gold, look at this. Absolutely picture perfect. Picture perfect demand zone right there. Look at this. I know there was a news driver, something, I don't know, but look at the reaction. Look at the reaction from that 5-minute demand zone. Boom. It's still valid, by the way. I don't know. I was just surprised on the reaction. I was not trading this, but I was surprised. Anyway, quick look on ES. Oh my God. I have no comments on ES. Nothing. I haven't really looked at ES today, to be honest with you guys, so I don't really have oh yeah, I think I have something. Oh yeah. Oh, one more thing. Okay, one thing. Before we change the subject, we have to go back to NQ. Sorry, everybody. We have to go back to NQ, talk about some levels. I know I said I would like to see the market. How many trades you take in a day? About, including the London and the New York session, I take about 2 trades or 3. Usually nowadays, I try to reduce the number of trades I have, 2 or 3 trades, including London and New York session. So let's look to the left. You guys will be amazed. Okay, let's start with the 5-minute. Let's look to the left here. I don't know what that is. Okay, look at that. STC concepts in the making. Supply zone on the 5-minute starting last Friday on the 5-minute chart in the AM session. 2 bullish candles. Look at this. Boom. It doesn't get any better than this. Okay. So that's not Indiana Jones. That's Superman. That's Superman. The classic Superman. Okay, let's go to the 1-hour chart. So there was a 5-minute supply zone. Let's go to the same exact time. Look at that. 1-hour supply zone. Absolutely picture perfect. Right here. 9 a.m. Friday candle. Boom. 1-hour supply zone. But it gets better. I think you guys saw this. Look at this. 4-hour supply zone. 4-hour supply zone with the market structure shift here. So, which tells us there is a 4-hour supply zone at 25,256, a 1-hour supply zone 25,297, and the 5-minute zone at 25,333 up there. Okay. 3 zones at the same area, picture perfect zones. It's not going to get any better than this one. Now, the problem is that they are super close to these all-time highs. So are we going to get back up there? I don't know. I think sooner or later we can. But I switched back to the 5-minute, and now look at where we are. I zoom out, and look at this. Here we are, and there's the 4-hour zone. How far is that? This is at 300 points. 300 points from the current position. Can we get there? I don't know. I don't think that we're going to get there today. Maybe we can get there today if President Trump would show us a recorded phone call with President Xi, or Xi, I don't know, Xi, like a phone conversation about, hey, dude, what's up? Nothing. Hey, listen, let's do the deal. All right, let's do the deal. And when he puts this phone conversation to the public, I think the markets are going to, maybe we get that 300 points. That Xi Jinping, okay. Just saying. Oh, let's go. Congratulations to the winners. I see some names up there. Can I read these names? I'm going to read it. Trader Cody, Borsch, congratulations. Lamtho, I'm going to say Theo, Epic Trades, KR Trades, Smoke Trades, Gabor, oh my God, Hungarians are killing it now. It's rigged. Oh my God. You got to be, I don't know. Congratulations to the winners. So I think this was a great analysis throughout the charts. So we have those zones, we have those levels up there. Watch for it. Otherwise, on the downside, to be honest, I checked everything I could earlier. I did not see anything. Nothing more. I know that's what you're gonna say. I know. You guys got to be active. That's how it goes. Oh. All right. If you say nice things to me, then maybe I could do something for you, or about me, not to me, about me. Or sorry, Magnus. Say nice things about Magnus, Abhishek, and Danny. They are the ones who are making this work. So yeah, that's what I can do. Long live. I love that. Thank you, Ezra. Duly noted. All right. We got to go on with that subject that that topic that we, yesterday we left. And that was about, when you become profitable, doesn't mean that you're going to stay profitable. So before we dive into it, thank you, Spin. Do you have any questions about the analysis, the setups, or anything regarding to this? If you have any questions, let me know. Okay. Congratulations again to the winners. You're busting your keyboard. Oh no. Just a minute. Okay. Maybe too late. Too subjective. Oh no. ICT. Here. I gotta get some ICT. I love being here, everybody. I love the community is awesome. I mean, yeah, I do have some days when it's a little bit slow market, but sometimes, busted your keyboard. Okay. Anyway, we're moving on. So yesterday I'm gonna briefly talk about what we just mentioned yesterday. Like mostly like the new traders think that because we get the fourth in leaderboard. Oh, nice. So once a new trader gets that funded account, there's a misbelief that they treat it like a graduation, right? So that's a problem. It's not a graduation because the real work actually starts once you get the funded account. So that's when the real, what's the missing? I don't know. What's the miss? I haven't checked the code there. Was there a code? I don't know. So what we need to talk about, what happens after you got the funded account. All right. What you're going to do after you got the funded account, how everything is going to go on. Okay. You got to be consistent obviously. That's the goal. So, let's just, go on. I usually call this the profitability plateau. I think it's kind of a fancy name. Like after you find consistency, performance sometimes stalls, or usually it sometimes declines, because that's absolutely normal, because every edge has peaks and valleys. Okay, whatever system is that you're using, whatever concepts are you following, or creating new concepts like this guy here, whatever it is that you're doing, that performance curve, can stall or decline. All right, you're no longer like learning aggressively. That's also in the cards. See how hard Magnus and Abby trying to keep the chat. I know. Okay. Crazy energy. Oh yeah, sometimes I told you I'm crazy. So I was trying to say that there comes a time, I would say, like, you're no longer trying to learn so aggressively, and it's a part of the journey, right? You're kind of like just maintaining what you've learned. Basically, you learn some basic things, and then that's awesome. And yes, you're here at MyFunded TV. We're learning lots of new things, sharing information. But basically, there's a period where you're just maintaining. All right. The danger is, like, the maintenance feels kind of boring. That's the problem with that. So because of that, you unconsciously start taking unnecessary risks, right? So it's basically, we're talking about the boredom part on this, but that kind of maintenance is because it's boring. You're taking like unnecessary risks, even unconsciously, because you want to feel something again, even if the market is not moving your way, because it's so hard to sit out a ranging market, and you really want to do something because you feel the urge, like, man, I need to push the button. You want to feel something again, right? And that's why boredom has blown more funded accounts than bad setups ever will, by the way. But I'm not here to talk about the boredom thing, all right? It's just part of the, being profitable thing. But we're moving on this. I'm just saying unnecessary risk. So the thing is, the next on this level is the decay of discipline effect, is what I call it. Okay. The decay of discipline effect. Now, what does that mean? Discipline naturally decays when pressure disappears, right? When you don't feel the pressure because you start to feel invincible, the discipline is definitely, starting to vanish, turning to thin air, or something like that. Early stage traders are disciplined because they are basically afraid. So again, new traders are a little bit, I know it sounds crazy, but new traders, especially on their new funded account, a little bit more disciplined because they're scared. Profitable traders, become comfortable after some time with the risk, the quote unquote risk. And there's a problem with that. So you become profitable because you took one or two payouts, you're on your funded account, but there's a long journey ahead. But the problem is that you start to feel comfortable, and the comfort actually kills repetition. Have you ever thought about this? Amelia, hello there again. So the comfort kills repetition. Really, it does. I think we never ever said this aspect of this trading thing, right? So fear builds discipline. I know there's another side of this. So fear builds discipline. Comfort erodes it. All right. So there's two sides of the coin here. That's the thing. But there's obviously always a shift. Okay. From fear to standards, I would call it. Okay. I don't know the missing letter. We're onto something here. So once you're profitable, fear isn't your motivation anymore. All right. The motivation, whatever you want to call it. You need standards. Okay. And by profitable, I mean, you can be profitable. Yes. I mean, what profitable means? Yes, you took some payouts, or you took your first few payouts. That is awesome, by the way. Great achievement. I'm not saying, okay, it's not. But then you need new standards. All right. Standards are what to do without supervision. That's what you do without supervision. All right. Standards are basically what are keeping you consistent when you're no longer chasing for basically survival in the markets. You got to realize that. So you got to get some more standards there. So when that fear actually fades away, standards must take over, or your edge will basically evaporate. Okay? Indiscipline and solitude, or something like that. Tom hit me so hard with that, I got a concussion. Okay. All right. So yeah, rules basically, but we're going to talk about that. So you got to have that psychology of staying sharp, basically. After getting profitable, you got to stay sharp. And there's kind of like a paradox to this success, because the better you get, the easier it is to drift. And I experienced this on my end. You think like, I've seen this 1,000 times, right? Oh, I've seen this 1,000 times. That's when you stop truly seeing it, by the way. Because that's what profitability does with your rules, with your standards. So there's a paradox, obviously, into this. And there's also like an overconfidence loop, if we might say that. You know, when you win, you feel a little bit more superior. You're trying to loosen on those rules. And then after loosening up those rules, you're going to make a bad trade. And when you make a bad trade, you're going to lose confidence. And when you lose confidence, you're going to tighten up emotionally. All right? And that's the problem. And that's the issue. So if you really think about it, winning can also hurt your emotional state of mind. And this is something important. It's not the market problem, what I used to say. It's a psychological issue, what we need to work on. So you're never more vulnerable right after a winning streak. And I felt that. I really did. So I've been there, and I'm grateful for the lesson. If you're on a winning streak and you're profitable, you're getting those payouts, you're also very much vulnerable, because that's when you start to make those mistakes. All right? Okay. And like we talk about like the daily routines, pre-market analysis, and all these things, like a ritual, right? It's technically like a ritual. So, oh, I hear some. Let's see. Let's wait for it, everyone. Use code DISIP. Oh, what's the word? DISIP in 30. 30 free core accounts. What's the letter? Discipline 30. Everybody, come on, let's go. You guys know it. Use your brain. Come on. I'm sorry, I'm just joking. Come on, everybody. You guys are awesome. Quickly run. Run. Run, Forrest. Run. Oh. Ah. I love lemonade. What is... Don't work? What happening? I thought that we're gonna have another round. Cool. Not working. Come on. You guys gotta be quick. You know how it works. Abhishek is going to work it out. He's handling the pressure, not me. I'm just entertaining. No, really. Anyone win? Win 1-1-1? If not, don't worry. It's gonna be okay. Don't worry about it. All right. Was not working. Don't worry. It's gonna be okay. Everybody, stay calm. So I was talking about the pre-market routine, okay? Or the whole ritual, basically, like, preparing your charts. And I'm talking about the section, or I'm talking about the part of the journey when you already reached those payouts and you got some payouts and you're still building those. Sky's falling. I don't see anything, man. No, it's fine. So, the thing is with the routines, okay? Some of you guys were saying it, and I completely understand, because routines are boring by design, all right? That's the point of the routine. That's the point. It's meant to be boring. Trading is meant to be boring. Doing the pre-market analysis is boring. Sitting through a trading session can be, it's meant to be boring. All right. The more consistent your habits, the less energy you waste on making decisions, by the way. Again, let me say this. The more consistent your habits, the less energy you're going to waste making decisions. Just saying. All right. Okay. So profitable traders usually stay profitable by reducing friction. All right. Same pre-market preparation, same trade review, same process every single day. And I can vouch by this. Like, this is what I'm doing every single day. I don't care about the new things, the new concepts, the new whatever. And I don't care. I'm looking for the same exact thing every single day. Nothing more. That's it. So consistently profitable traders, maybe I would say pro traders, but I would say consistently profitable traders, they are not reinventing. They're basically just repeat the process every single day. Nothing more. Okay. So, yeah. So it does have emotions. It comes with emotions all the time. Staying profitable, we know that, staying profitable equals, staying emotionally neutral. And that's the problem, because emotions are always there. I mean, those emotions are always trying to, come through the surface once you're sitting at the charts. Even if you're a pro trader, you got to fight, quote unquote, fight with those emotions. Okay. You got to stay emotionally neutral. For example, not getting high on the wins and not spiraling on the losses. That's super important. Every reaction must stay within the same emotional bandwidth. All right. Like, obviously, it's a good thing to be joyful and happy about the winners. That's cool. But then once you're done, you're done. Move on to the next one. All right. That's the thing. So what I'm trying to... Oh, I hear it again. I'm going to help you guys. Let's see. Let's see. Get core 40. Get core 40. 40 free core. Jesus Christ. I have to get... Okay. 40 free core accounts. Guys, run. Just run. Go. 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 Just go. Go. Man, I am amazed. All the free stuff MyFunded TV gives us. This is just amazing. Amazing. Congratulations to the winners. Core accounts, baby. That's awesome. 40 core accounts. Amazing. We like core accounts. Actually, the basically one of the best price in the whole prop firm industry. You have the path to go live. You have everything, all the backup, all you need. No activation. And what else? Awesome. Congratulations again to the winners. All right. What I wanted to say, that basically the emotional factor is the real equity curve. That's what I wanted to say. The emotional control is your real equity curve. All right. And also, like, by being profitable, there's also like a lifestyle factor or something. We can call it a lifestyle factor, I guess, because I know I said it before, and I'm going to say it again. Trading is basically a mirror of your entire life. I know it's hard. I know it's hard to say it like that, but trading is a mirror of your life. And I'm not saying like if you're blowing up accounts, then you have a miserable life. Don't worry, I'm not saying that. All right. But and I'm not talking about one single account. I'm talking about your whole trading career as a whole. Okay. If you're achieving results one by one, step by step, building up your career, that is actually reflecting that you are disciplined in your life. You're moving forward. You're a straight thinker, seeing your goals. And I'm talking about the small little puzzle pieces in life. If you're, for example, chaotic outside your charts, for example, poor sleep, bad daily routines, or stress. By the way, stress, guys, I could talk about the stress factor for hours. I had so much stress back in the years, like 4 or 5 years ago. I'm not joking, guys. I think I lost years from my life. I think I lost years. So stress is the number one factor also. And your trading is going to reflect that stress. Okay, even the poor sleep or the bad routines, but stress, it's going to reflect on your charts. Hey, Matt is here. I didn't know that. What about what? Oh, the deal. I'm sorry. The singing. Okay, we're gonna do that. You know what? We're gonna do something about that, but not now. But I hate to make promises like this, but we're gonna do something about the singing. Okay. So to finish up that thought, about the lifestyle factor, and how real life outside of charts are reflecting on your trading. That's why consistency comes from basically, what's the word for it? Like a holistic discipline, basically. So consistency comes from a holistic discipline. You can't live like a mess and trade like a monk. All right. That's what I'm trying to say with this. And I was also like risk management part, but we all know the usual things that keep you profitable. But we were talking about the emotional things, emotional part. Welcome, Rocket Scooter family's here already. All right. Welcome, guys. So, yeah. So, when you're consistent, you start thinking like, I can risk a bit more and I know what I'm doing, right? When you're consistent. And that's the start of the whole thing, right? Risk controls should be tightened as you grow, not loosen, all right? As your account grows, as your trading career gets better and better, so as your career and your trading journey gets better and better, that's basically like the part when you really start to build that discipline. All right, adding more protection, not more exposure, basically, as you move on and on. Hello, everybody. What's up? Abyss, what's up? The Rocket Scooter family is here, I know. So risk management, isn't for bad traders, because I also heard this like you need to start first. No, risk management is for traders who plan to stay good, all right, who plan to stay consistent. It's not just a one-time thing. And, you know, it comes with habits. I would call this like sort of like a maintenance habit. I would say these are also things that you repeat, like in your trading process or in your trading journey. The daily reflections, we talked about that, right? You can also do like one-line journals as well, like nothing fancy. If you don't have time or you're too lazy or bored to do the journaling, at least do the scorecard thing. We're going to talk about that, okay? Did I follow my plan today? Were my levels correct? Okay, keep your process in front of your mind. Worst case scenario, at least have some sticky notes. I don't know, but at least do some one-liners to reflect. Even if you don't want to do the scorecard thing, because you might think, oh, that's stupid. It's not. I promise you that it's not a stupid thing. It works actually. AD, what's up? So also there's like the weekly reset thing. Once you're profitable, so reviewing the setups, review the week, emotional leaks, you know, risk performance. You got to look back. Actually, the reflections over the weekend could be much more important than at the end of the day, because at the weekend you have time and energy to focus on the charts. So if you're doing the reflections or reviews or journaling on the weekend, it might work better for you. Who knows? You know, you can do the monthly too, but that's a different thing. So what I'm trying to say is like audit yourself before the market audits you. That's the thing. And of course, it comes with some conclusions. As usual, markets evolve. Your mindset must too, as we all know it. One of the conclusions is that what worked last quarter might not work the next quarter, okay? Because we are adopting as well. Review your edge, I would say, every 3 months. I mean, yes, I'm doing the same thing like I did in the past almost like 18 months, since I'm getting, well, not 18, but a little bit less, consistent profits and payouts from trading. I'm doing the same exact thing, but you got to adapt to the markets. Like higher time frames, weekly, monthly, then the market goes into a ranging period, or then it shifts to a trending period. You know, the usual things. You got to adopt. So review your edge every 3 months. And if you do the backtesting, and by the way, I never said and I never will that backtesting is going to make you better. Backtesting is only good for data collection, nothing more. I don't believe that if you do more backtesting that you're going to be a better trader. And by the way, just an FYI for you guys, Matt is around here, don't worry, but he has some stuff to do. So don't worry. I'll hold the line for you guys, but he's coming, don't worry. So when we are adapting, what we do is adapting risk parameters, like we are adapting to a ranging market, as I said, or a trending market, but never abandon the process, never abandon the core concept that you've learned. Whichever is that you're learning, it could be indicators, it could be moving averages, whatever, it could be support, resistance, supply, demand, ICT, whatever. Never abandon the main process, the core concept that you're following, that you're learning. We talked about strategy hopping a few weeks ago. I would say that's maybe the worst killer for new traders, basically. Experienced traders don't have this issue that much, because they already know that there's one way to follow, one trading strategy. I would be actually surprised, like, if I would ask, maybe I will ask the other hosts next time, like, they are getting also consistent payouts from the market, from the prop firm. Yeah, of course, they're getting consistent payouts. I would highly doubt that the other hosts or anyone who is profitable proven profitable in the social space would change their trading style. They won't. Why would they? So the worst thing that you can do as a new trader is to do the strategy hopping. Okay. Don't do that. So never abandon the process. The only thing that you might do is adapting that risk management. That's it. Adaptation keeps you profitable. All right. Ego keeps you broke. Basically, that's the thing. And you can protect that consistency. It's actually simple. I told you guys about the 1 micro rule. All right. Trade 1 evaluation account with 1. And I'm saying this to the new traders. All right. Trade 1 account with 1 micro. All right. It's going to keep you humble. I know it sounds weird, but it's going to keep you humble. Forces sharper execution as well. All right. Now, I'm not saying you have to be surgically precise once you're still having a positive risk to reward ratio. I told you guys this earlier in the stream. Okay. And it's going to reset your behavior. It's going to let you refocus on the process. All right. And of course, you can share your process here at MyFunded TV. That's why it's such a great community. You can always share with others. We have the usual names, the usual suspects in the chat. All right. So share the process, share the journey. It's just an amazing thing to do. So the key takeaways is what I'm trying to get to is like profitability is temporarily if you stop doing what got you here. Okay. Or what got you there. It's not a reward. It's a responsibility. Okay. That's the second thing. Every day is a new evaluation. Every day. So profitability isn't a trophy. It's rent. And discipline is how you pay it. Okay. That's the thing. It's not a trophy. It's a rent which is paid with discipline. You don't keep profits by knowing more, because we can learn all the concepts in the world. You keep them by doing the same right things longer. So you keep doing the same things 1,000 times, 10,000 times, 100,000 times, 1,000,000 times. Matt is going to be here. He's, I think he's, I don't know. I saw him typing in the chat that he's having some project going on with construction or whatever. I think they're taking the house away or something. I don't know. Maybe they're shifting the walls or something. I don't know. But but he's here somewhere. I don't know. He's getting swatted or something. I don't know. Something is happening. But don't worry, he'll be back. Yeah, the market makers took his house, maybe. So yeah, what I wanted to say is like staying profitable is basically harder because it requires a certain amount of humility after success. All right, never forget that. He's installing the disco lights. I should have known that. That's what he's doing, right? So, so yeah. Yeah, I think this is what I wanted to basically cover because yesterday we were having some. Yesterday we could not finish up this one. Actually, this was a bit of a longer topic. I didn't bring you luck. Oh, I'm sorry, man. I'm so sorry. I'm sorry about this. But I don't know. I just want to say that on Friday we're gonna have Terry on my YouTube channel on London session. If some of you guys are up in the London session, we're gonna give away 5 core accounts in my stream. Just to let you know. All right, Friday, not tomorrow. Friday London session. Terry trades. She's gonna be a guest on my channel. And we're going to talk a lot about MyFundedFutures, and we're going to give away 5 MyFundedFutures core accounts. All right, because we love MyFundedFutures. So if you guys want to join, there's my channel. Thank you, Abhishek. Friday, okay, so not tomorrow, Thursday, Friday, London session. My stream starting at 2 a.m. and usually I'm there about until 4 or 4:30. If some of you guys are able to be there, My Funded Futures giveaway in my session. We love My Funded Futures. If you don't see the link, you can see it in the upper right corner. There's my YouTube handle, youtube.com/@TomSaboBiz. Tom Sabo Biz, or you just type in Tom Sabo or Tom Sabo Biz on YouTube. You will find me. You have to look for the good looking guy in the avatar. That's it. So yeah, 5 account on Friday. So not tomorrow, Friday. And we'll have Terry as a special guest. Super awesome. So maybe I will bring more, like, I don't know. Don't miss the stream. Yeah. Which Eastern Standard Time? Sorry. Yes, 2 a.m. Eastern Standard Time. I always try to keep it on Eastern Standard Time. All right. So London Kill Zone starts ICT terms at 2 a.m. London Open is at 3 a.m. Eastern Standard. 5 core accounts. All right. So stay tuned. And if you guys have, by the way, and thank you, Dave. We used to have great London sessions, by the way. We always go a little bit crazy, you know, all the usual crazy stuff that I do, but it's amplified on my stream. Not much luck. Come on. Oh no, gotta go hype. Don't say that. Well, I will send some energy. If you have questions, by the way, about the topic we just covered, or risk management, or some levels, if you guys want me to look into ES or gold or whatever, let me know. I'm here to stay as much as you guys want me to, as Matt is trying to pick his house in one piece. I don't know. No, I'm okay. Do you serve drinks? Yes. If you be at the London session, I will serve lemonade and energy drinks and ICT. Okay. Yeah, we love that. Matt is coming. He's just busy with his house. It seems like there was a big SWAT team fighting over the other building next to them, and they blew up a hole in the house or something. So they have to cover it with some sheets. I don't know. They're doing it. They're trying. So 6 a.m. Eastern Standard. No, it's starting at 9 a.m. Eastern Standard, the MyFundedFutures stream. 9 a.m. Eastern Standard every day. All right. With Nick, Barbie, and Terry. And then comes Ash and me and Matt. That's how we do it. So let me see. Sabathon. The link is up there in the upper right corner. I mean, that's not a MyFundedFutures stream. All right. That is my channel. William. That's not a MyFundedFutures stream. That's just my channel. I just said it because we're going to give away with Terry 5 MyFundedFutures core accounts. If some of you guys might felt like a little bit unlucky, you might have some luck with the core account giveaway in my channel. That's why I said it. The guy who got what says something bad about. Oh no. Do you update zone during the sessions? Yes. For example, now when we started the stream, this was such a great example earlier, by the way. This was such a great example. We had this 5-minute demand zone created just after 9. This is the 5-minute chart. This bearish candle created the perfect textbook example demand zone at 9:45, and then the market, pushed higher, very strong push, and eventually we started to see this drop. There must have been a comment or some tweet from President Trump or someone, I don't know, but we went down to the 1-minute chart. All we did was waiting for a pullback, retracement here into one of these fair value gaps, and boom. So this was the thing. Absolutely perfect example. And now if we go out to the 5 minute, yeah, we still have the London low, by the way. We do have the London low here, which is 868. 868. I don't know. What's the distance? I gotta. Oh, it was a Fed? Okay. Yeah, 63 points. But I don't know. Let's check on ES. All right, real quick. Check on ES. I haven't traded this. I don't even have my markups on ES for now. Let's see. This is midnight here. Okay, so there's actually, it's not a perfect one, but on the 5 minute, here you go. There is a demand zone. It looks terrible, I know. Here's a 5 minute demand zone on ES. It's not a really good one. Technically, it's valid, but I don't like the way it looks. ES, if ES decides to go further down, I would say that there's a chance here to go down to the, oh wow, this is not coincidence. Let's see, opening up this candle is 6700.75. All right, okay, so it makes it even more juicier that we have this zone. Yeah, at 6700. That's kind of amazing. On Tom's stream, yeah, I just want to say, guys, that don't forget, it's not tomorrow, it's gonna be Friday. So not Thursday, Friday. Okay, we're gonna do it on Friday, and it's only 5 accounts, so not 50, but 5 core accounts. But Terry is gonna be there, so yeah, Matt is coming, but there's something, some bombshell or something that they're, I don't know, something is happening with this house. It's trying to get the construction going on. He's good. He's gonna be here. No full porting. Matt is coming, Trick. Don't worry. He's coming. He sent a message in the chat that he's having some stuff to do. So I'm happy to cover his session. But he'll be around. Don't worry about it. Do you play any instruments? I wish. I don't. So unfortunately, I don't. He's fencing. Yes, I kidnapped Matt. That's the truth, but that's a secret. All right. Yeah. Yeah. Thank you, Abhishek, for sharing that. Thank you. So, when Nikora, see if Terry goes short live. We'll see. We should call her full port Terry or something. No, she's not full porting. She's not. Excellent job by her, by the way. I kidnapped ICT and Matt too. That's what I did. So let me actually look for some levels here. There's an interesting level down there, by the way. If ES starts to go lower, then I think NQ will try to tag that 868. So when that happens, let's go down to the 1 minute chart. When that happens, there was a level here earlier, and I know this was an Asia session. I don't know why I keep looking at this level. This is the 1 minute chart. There's a liquidity void here, and this is a demand zone. The problem is it's only on the 1 minute chart pre-London session, but look at this move. I don't know. It's kind of an interesting level. I'm just going to extend it. I'm not saying that we're going down there, but it would be interesting to see the reaction if the market would go into that way. So that happened. That's a 1 minute demand zone down there. Nothing special. So just the usual stuff. Stick around. Exactly. Stick around. Matt is going to come around. Don't worry. No. Drop more. You guys wanted to. Actually, I see a potential that this one is going to drop more. That's why I said if ES goes to that demand zone, let me switch to ES. Yeah, look at that. Look at that. And this is a perfect level. It's, I'm going to put an alert here at 701. It's good. So as long as ES wants to go for that demand zone, it's going to pull down NQ. It's going to pull down NQ. That's why you got to watch for if ES is going to take the zone, you can expect a sharp bounce on NQ. When I do this, I usually set an alert, and if I see ES also waterfalling down, I try to take partial or move my stop, and this would be kind of like a scalping method. So, you know, just saying. I don't know. In this case, I think ES is the driver. ES is driving. Monthly open. Yo, thank you, Frenchy Trace. Thank you. Yeah. So, yeah, that's what he does, Meep. That's exactly what he does. Okay. We have just a quick look on gold. Let me switch to the 5-minute. And again, if you guys just tuning in, look at the reaction on that 5-minute demand zone earlier, but nothing on the upside. I was surprised on this push, by the way. Very, very surprised. And, you know, it will be interesting to see how this tariff thing is going to go with President Trump and the Chinese president, Xi Jinping. I got to learn how to pronunciate that properly. I got to learn that. Okay, we do have a displacement to the downside. I would be just scared to do this. Like, what's the... Yeah, so we're approaching the PM session, which is somewhat good. But, you know, which is somewhat good. But I never take a trade during the lunch hour. But... you know, because we are getting so close to the PM session, like last time I took a trade in the PM session, like, I don't know, it was quite a few months ago. So, yeah, let me know. Yeah, we picked the winners. Yeah, we picked the winners already. And congratulations to them. So let me know. Let me know if you have questions regarding this setup. Actually, I'm looking for zones on the downside here, but there's nothing. There's really nothing. I would love to take a short if I would have not been taking any trades today, but since I already did, this 1-minute demand zone is just not cutting it for me. It's just not it. It's just not it. But we'll see. Anyway. Yeah, please do like this. You're going to enter the trade of... I can't answer that. We're only talking about MyFundedFutures, guys. That's it. Matt is coming around. Don't worry. It's C-ping. Okay, thank you, Borsch. The C-ping. It will crash. It seems like it will. It seems like it will. Look at that. Okay, 37. It's not, I mean, for NQ, this 37 points is nothing. Basically nothing. Here it comes. Man itself. Go. He's here.
Thanks for covering for me, Tom.
Hey, no problem, man. No problem.
Crazy afternoon. I've been running up and down the stairs. I'm out of breath.
I know. It's fine. We wanted to hear the music.
How's your day,
everybody,
man? How's your training day going, bro?
All good, man. All good. This music is awesome. Let's break the chat, everybody. W's for Matt.
And I really
Let's
appreciate
go.
you, Tom. Thank you for coming through, man.
No problem, man. Absolutely. Hey, I love being here. Oh, what's happening? Okay, I love being here at MyFunded TV. So I could be here all day long. By the way, I love the chat. Everybody's so positive. So, what's happening with your house, or what's going on? Did somebody blow up a hole in there, or what's happening? Is there a construction?
No, I blew up all my accounts. I got so mad. I took a sledgehammer and just smashed everything.
Okay, that's what happened. Yeah, we thought so. All right.
No, man, we're remodeling our backyard. So basically we have like this basic sort of backyard.
Mhm.
And we're gonna like basically amp it up to look pretty cool. Oh, let me show you. I actually have a 3D rendering of it. Let me pop this thing in here somewhere. I think I got it somewhere. Oh wait, hold on. Here it is. Let me know if you guys want to see what my backyard is going to look like.
Of course, we want to see it. Absolutely.
Okay.
If you can show
y'all the design. Okay, so this is what it's going to look like.
Wow.
We have right now there's nothing. It's like an empty yard with nothing in it.
Wow.
And now there's a little walkway by the house. This is what they're building.
Oh my God. Oh, wow. Look at that secret hideout there. Wow.
I've got like planters. This is an area for Pickle to go poop in. So you're going to have like a little grassy patch here with some planters. Now this is all like rendering, but there's going to be like waterfalls and lighting. And right now they're trying to build this like side fence thing right now. So we're going to have like this outdoor seating with like fire pit and.
Okay, so now it's been confirmed. I definitely have to go to Texas and I have to see this in person.
You gotta come, man. Like we'll sit out there, we'll drink some beers and we'll
we're gonna do the live stream from there. How about that? With the chat.
Like a collab show, yeah. So it's been crazy because the crew came over yesterday and they botched the fence. So they had to redo it today. So we had to kind of make sure everything was going good. Now they got a good plan for it. Because it's weird because the fence is all like slanted and it wasn't half of it was their fault. Half of it was the fence itself was wobbly. So
it looks awesome, man. I love it. I just love it.
How was your day today, man? Trading.
Day is awesome for me. I'm in the greens. Yesterday I made like 1,600 on my fundeds. Today I made 1,200. I know it's pocket money for you because you make it in one account, but hey, I'm doing great. I love the green days. Green is green, and I was just trading with micros, so I'm perfectly good. And then that's it. We took some nice trade in London session, New York as well. And right now, I guess everybody's waiting for some news from President Trump or whatever. But that's it. Maybe you know more about this. I don't know.
Yeah, Trump texted me this morning. He says, market bullish, maybe. That's what he said.
So.
I don't know, man. I'm with you. In this environment, like, okay, well, do you think the trade war with China and the issues we have now, right? It's very similar to like 2018 or whenever we had the same thing happen again. Do you think this is like a longer term sell-off potential, or is a quick thing that they'll work it out in a week? You know what I mean? What do you think?
Well, the markets are still, if I look at the weekly and the monthly, the markets are still super high. And I told you, like, I want to see quote unquote a bit of a crash here in the market. I would love to see a crash, but I think President Trump said he gave time until the 1st of November or something. So to cover this this tariff thing. So I think they're gonna come to an agreement. So I think it's gonna be agreed upon something, and the markets is gonna make a new high again. That's what I think.
I 100% agree with you. I think that's it too. I can't imagine if the global tariffs, the shock of that crashed the market for a month or so. What China is a smaller part of the whole world's scene, right? So how would that be worse? I always look at it like that.
Yeah.
And this will be the second time Trump and China are duking it out over tariffs. They always go back and forth. One day they hate each other. One day they're working it out. One day they hate each other. Every tweet, market's up, down, up, down.
Actually, I was reading an article on Bloomberg the other day, and they quoted Trump on I don't know, it was a tweet on True Social or something that he said something like he's sure that they're going to find a way to work things out or something like that. So I think they're going to do that, and that's when the market is going to make a new all-time high. That's what I think. Anyway,
I can see that.
Yeah.
Yes, sir.
All right. We had a great time. I think it was an awesome session. So thank you, everybody, for the vibes. I just love being here, and thank you for the opportunity I could show you guys this trade live and the setups. This was a great day. So thank you, Chad W's, for Matt. Stick around. And thank you again, Matt, and have an awesome rest of the session, and see you tomorrow, right?
Yeah, appreciate it, bud. And next time you need to go on a holiday, I'll cover for you. Like, I'll do your
problem. It's all right. Anytime, man. Anytime. See you guys. Cheers, everyone.
Right, later, Tom. Thanks, man. Take care, bud. The great Tom, man. Give him some dubs in chat. We love Tom. Sorry, I ran up here out of breath, guys. Yeah, fence project. Yesterday, we have an existing fence in between the houses because the HOA like has a standard. So we can't like knock the fence down, just build what we want. We got to artistically build over and around the fence that we have without like impeding the neighbors on all three sides. But the thing is that the fence itself is not straight. It's sort of like curves and is slanty because of just the grading of the house. Like it slants this way. So we're trying to build something that looks flat and even and on top of something that's not flat. So that's, am I watching ES? Yeah. So when I ended my stream earlier, I was in a trade, and then right before I left to run downstairs, I X'd out of my trade right here. I turned my one account that was red. I had all my accounts have been green. I've been working on them. And this morning I had one that turned red and one that was red and turned green. And I had the last one turn green. So I've been scalping liquidity pocket like left and right. And then the final one, I had 3 contracts, S&P right here, MHP 67.13, and I closed out right at 26. I got the 13 points, X'd out of it, ran downstairs, and market's pulling back. So lucky me, I've turned everything green. 37K today, and some of these accounts are uncapped payout accounts with another firm that I've been trading with forever, uncapped. So these guys are going for 100K payouts. That's why I hit them with like 5 and 10 contract trades. I'm trying to build up to 200K so I can take out 100. Just another challenge that I'm doing. So you're going to see me making some bigger trades in some of these accounts just to grow there. So yeah, this was a great day. I got most of my gains pre-market. I longed right out the door off of the open because we had monthly hedge pressure nearby. I longed again. So I took the trade. And then by the end of this, I was already up like 20. And when the market opened today, right when we opened, right here, I bought right down on the dip, got some of the longs, got out of the way, and then I just take it. Basically, was done. S&P had A+ setup from bull zone bottom 24. It had A+ setup from 14. So when we dipped to there, I grabbed some S&P, closed out, took my profit. Same thing, I proxy traded on NASDAQ at half gap, got there, took some profit, and then that was it. I'm sorry, here, my bad. I forgot this trade. I took a DD band scalp from here to here, and I actually hit this one with 10 contracts in one account to get the quick 40 on the scalp. 2 minutes. Got that scalp there, then it fell, and then I grabbed that final trade there and closed out on those NASDAQ. So I was trading NASDAQ and S&P, split up all the accounts. This is the day where I did a lot of trading. You don't normally see doing a lot of trading. When markets are moving like this, the opportunities are there, man. I had plenty of scalps, and we got this liquidity pocket bouncing. And then finally it failed, which is bringing me to another point. We've lost monthly hedge pressure with negative monthly hedge resilience. All the indicators have flipped bearish again. So this is like probably dead market today. And I'm very scared, and I'm not in any trades or doing anything right now. 90% of days should stay above this. Let me zoom up here. So with this ratio greater than half, which it is, 90% of days should stay above here. When MHP resilience is greater than 0, 90% should stay above. Now it's less than 0. So it's roughly 74% of days under all condition back test. So 90%, 74. And if you break through this, which I'm getting to right now, the 26% chance a market crashes. And I wrote this morning, dead market below MHP. And I wrote dead below here. And there's no long setups in here whatsoever. And boy, I feel so good because I ain't in anything right now. And this market's kabooshing, as somebody said in chat. When you have the low probability MHP break, it causes what's called a gamma squeeze, and you'll see that craziness. I don't know if there's news going on right now. Let's pop that up really quick and just double check there's not anything coming through the pipeline. Jim Cramer said long the market. That's the news. Just kidding. But seriously though, who knows what's going on? But anyways, when you break through MHP, it's pretty gnarly and you get that sort of gamma squeeze effect. And I've got nothing on the table right now. We're actually falling all the way down, and this could completely fall down and crash. There's no other supports I would willing to take, with the exception of maybe NASDAQ here has an A+. So when S&P breaks this market's irrational. Rocket Scooter is going to flag you to that irrationality. The guarantee is that when these lights are red, VIX is going to be going straight up and VVIX is going to be going straight up. The moment you pass through this at exactly 11:45 this morning, you're going to see the VIX start moving exactly when you break through MHP, VIX starts going up. This is something you'll notice. So at 11:45, which was here, right? VIX starts going up quickly. At 11:45, VVIX usually starts going up just as well. Here's 11:45 right here. VVIX starts going up. So when you break through monthly hedge pressure, VIX just starts going out of control, which means the volatility can go out of control, which means the distance traveled of those 1 minute candles could also go out of control. Your normal 1 minute candles that look like this, like your big fat ones, right? Pretty normal. Now volatility is extended. Everybody see left and right. This is small and this is pretty big, right? Enter hedge pressure break, volatility goes up. Your volatility is going to get wider. So I'm not just buying every dip like I was earlier. We're in a different state of the market. When MHP is broken, I'm going to size down immediately and only trade small positions only on strong pivots only. And the only strong pivot that I have on S&P today is going to be all the way down here at support. So today, if I make another trade, it's to the long side, and it's only going to be a small position here, maybe some micros, and a small position here. Small only, and small because MHP is broken. And we have a rule that says whenever markets are rational, you just trade small. I got a handout for that. I'll show it to you guys. This is from a boot camp. Rock Scooter 101 stuff. And if we fall all the way down to Bull Zone and DD Band, oh boy, I'm going to have a good time with that one. I love these trades. They're some of my favorite setups. Amidst this volatility, I grabbed that knife for a hot minute. Really small. Don't need it to be big because the candles are going to be big. So I'm going to trade small. Pretty straightforward. This is all textbook. Nothing crazy today. Market's just testing liquidity. We've got the looming trade war crap. This is the same as 2018. I've traded this all before. Nothing's different this time around. Here is my handout. Irrational markets. The structure of monthly options has been broken to the downside. That's not good. That can create a squeeze of a lot of people selling off. And so when you're irrational, it means structure is broken, and you can assume markets are not moving rationally. Indicators will fail to lead what they track, and this is all you guys' stuff too, not just our stuff. Your indicators are going to be a bunch of bad signals at this point. ETFs may move before the stocks, so don't trust any of your our indicators that provide arbitrage indication. Strong pivots are ideal conditions 90%. So something that's really strong is the only thing I'll trade. And when it's MHP break to the downside, I'm circling it right here. The second one, number 2, small, strong pivots only. That's it. So I'm not shorting an irrational market. I'm going to trade strong pivots only, which does not include this one here. My only trades are small at strong pivots only. Now, NASDAQ has completely fallen below half gap, and your white resilience is negative, which means this is flagged as resistance, which means it's likely to dive one more time to fill the gap. NASDAQ has some really strong A- and A+ setup exactly here on the edge, right at about 733 and 756. This area I'm going to build with micros only. Maybe I might be a maverick in one of these accounts. One of my accounts that's making a bunch. I might jump in with some minis there. But micros and then micros here. I'm going to grab the dip. I'm going to be a knife catcher today and just take a scalp. If I can get 40 points on NASDAQ, I'd be very happy. But we're likely to jump and fill the gap here. 756, and that's next target I'm looking for. And that's it. Which one's actually the leader? I use S&P should be your gauge about the overall stock market, not NASDAQ. S&P, like NASDAQ will tell you if people are buying telecom and healthcare and tech. But if people are selling tech to get into energy, then the Nasdaq will plunge, but the S&P will stay forward. And the market doesn't normally crash when there's rotation or crash long. If the S&P is coming down, it means people are liquidating from all sectors together and money is leaving the stock market. That weakens both of them. So if money's leaving the stock market in general, if the S&P is falling, the Nasdaq is falling. If the S&P is rallying, the Nasdaq is likely rallying, but maybe not. If the Nasdaq is tanking, the S&P could be tanking, could be rallying, could be flat. So Nasdaq doing something is never a sign that the S&P is doing something, because the rotating sectors, consumer discretionary, utilities, real estate, these things the Nasdaq is not seeing. So the Nasdaq will move just on the major components of it. Your trades are sick, Matt. Thank you, man. Appreciate that. This was pretty spot on. I had a couple of losing trades on stream that I've worked most of it back. And the losing trades on stream are pretty simple. I bought here with 2. The market started falling. I trimmed to 1. We held to there. I added another one. It went to there. I trimmed back down to 1. It fell to there. Came back up to there. I added 3 and scalped. Held through all of that. And then closed it all out there. So 2 and 2 and 1 and then 3. I've managed to take that account right back up to minus 217. So that account is just about sort of... Actually, I scalped it. I think I scalped it twice in here. I can't remember, but I managed to dig it out of the hole just a little bit. It's almost out, but so this is because of VIX expiration. So VIX doesn't expire till next Wednesday. This month I was mistaken because I thought, it was today, but because I think of the holiday, they'll roll VIX forward an extra week. So VIX expiration this month is actually next Wednesday. Yeah, so that's today, unless they change it. So it's normally the 3rd Wednesday, unless there's a holiday in that week, like a Monday, Tuesday, or Wednesday holiday. And if that normally being the case, they usually move it to the following week. Yeah. Do I do live trading? Yeah, I do. I live trade on YouTube every day, before this show and after this show. I'm like one of the biggest YouTube streams for futures trading. I've got a pretty big old show. You're welcome to come check it out. This might fall into the risk interval. Man, I love you guys. Y'all been paying attention to the boot camp. Let's measure it out, right? Have we fallen a risk interval today? Yes, we have. And guys, can I tell you something? Are you guys sold on the risk interval idea or what? Have I convinced you there's some structure going on here? Are you loving it? Right? You're learning a whole lot about what's kind of going on in the market, right? Risk intervals left and right. Now that you see it, like you can't unsee it, right? So this is an interval based on margin requirements. It's insane. And you can do this top to bottom all day long and watch the market find liquidity at risk intervals, right? So here's the second one here. Right. Now it's only R. Now it's only risk, no interval, right? Okay, but anyways, you can see that the market loves to move in these like ranges. And whenever it's testing liquidity very quick, it's moving that distance. Isn't that neat, right? There's just something going on there. Now we fall in a second risk interval, almost down to here. This might be a place like right at the edge here. And I'm not going to get in too early, but I definitely want to try a setup close. 56, that's still a little bit farther from here. I'm going to give it a little bit more room to play, but this is the risk interval edge. And you guys can see at the edge of risk interval, that volume spikes up as you always will expect to see. Let's let it sell off a little harder. Remember, small trades only. Small trades only. I will take when MHP is broken irrational. Small trades, don't jump in early. It's better to miss out than to get in and bag hold. I still got maybe like 20, 30 more points in NASDAQ. I'm going to put 2 micros here and 2 micros here and stop out the whole thing there, minus $600. Okay, ready? Ready? We're going to add a couple at the start. Give me some red, baby. Right on the edge. 1, 2. 2 micros. Right? So one mini every 40 points on NASDAQ is $800. So a fifth of that is $130 every 40. So $130 if this drops down 40. I'll grab 2 more down in here. Let me grab it in one of my big accounts too. Let's have some fun with this one. All right, let's grab this with 1 E-mini at the full dip. So this is going to be down $130 or so whenever I follow the MHP. I'm going to add to it. Let's get a little lower, a little bit lower, a little bit lower, and we are going to grab it. Okay, grab it 2, grab it 2, grab it 6. Oops, I hit it 7. All right, that's it. Now I'm going to hold on. I'll lose $1,500 if I'm wrong. I'll gain a couple thousand if I'm right. Now, this is very risky doing this. Very risky. Somebody very careful here. Very careful. MHP long, a lot of times is a very strong bounce. I also might allow it to overshoot all the way to pocket. But in reality, it should be okay here. I grabbed 2 E-minis on one of the account that's up $5,000. I grabbed 2 E-minis on it. Again, very risky. I would not recommend trading right now. I'm keeping my risk very light and very small as I'm expecting hopefully some kind of bouncing here off of that. So we'll see if I get some green. If not, I'll just take a quickie little loss. I'll add one more contract to this one because I'm going to be a rogue. I got 3 NASDAQs in one account. I've got 7 micros in this other account to bound on MHP bounce. Not the best sort of play, despite the crashing and craziness. Oops, I gotta delete all this colorful junk here. Delete. You guys can watch me make a scalp on stream. Let's find the last little move there. How far did we move today? 720 to 857. That's 130 points settings. Let me put this. I do this to measure. This isn't a fib tool by a fib. It's just the fib tool. I use it as a ruler to measure the distance. I get lazy looking at this. So it'll show me 856 all the way down to 720. That's a 130 point rip. My 3 contracts, I'm grabbing right at MHP. One of my favorite setups to bet that at least NASDAQ maybe tries to hold structure, but we'll see if I get something. Now it's going to fight here. If we lose this, market's absolutely crashing. This is a dangerous spot to trade from. But as you guys can see, it is trying to hook right there, which is normally what you'll see at monthly hedge. Now, whether I'm right or wrong, I'm going to be wrong small because when you're wrong from the right place, baby, you're always wrong small. And that's how we roll it. Let's hit it. Got some micros there. Remember, I added some. I added a few more on the overshoot. I got a really solid cost basis. Pretty decent. I mean, 51, it could be better, right? And if I'm wrong, I'm wrong. Wrong small. Like I cut out quick and I'm wrong small. And if this market's crashing out, then I don't have to worry about losing too much here. Keeping it tight with some micros. This has strong pivot. And if we lose this, we're freaking crashing. Now let's do one more thing that I like to do here is double check that the S&P and NASDAQ monthly maps are not breaching into bear territory on the longer term. Very important you guys do this whenever market's kind of collapsing. How far can it go? I'm going to write some numbers on the screen and let you know that today, 660 S&P, that's the magic number. I got to do this quick. I need to make the decision quick. 660 there. Let's run QQQ, the same calc. QQQ today. Wait, hold on, that's yesterday. Today and yesterday, let's find the worst case scenario, 590, which is tomorrow's support. QQQ, come on, pencil tool, stop being lazy. 590. Let's convert those to futures really quick. Let's go back to NASDAQ futures. Oops, let's do QQQ on the minute chart. 590 is really far away. That's 7 times 4. It's 280 points lower than here. So that's going to be right at 470. So 470 NASDAQ is where the entire monthly market can fall to. That's the big one. And this is probably going to lose. So I don't like this. Boy, oh boy, big ass overshoot there. So I might close this out with a tiny little loss. We'll see. I'm going to hold for a little bit. I'm going to let it bounce around in here and hopefully something happens, but we're losing everything right now. This is pretty bad. We might kind of cut that out. Let's trim that down a little bit. All right, 7 wasn't a good idea. Let's trim this one down a little bit. All right. Drop that one down to 2. I might about to close it. I'm allowing some volatility. I'm sort of edging out of the 2 positions I have. So 470 on NASDAQ is the crazy one. S&P 660, I got to run these calcs. Where is 660 here? That's it. This is the long-term bear market exactly here. Okay, so exactly a minute ago, 660, that is the longer-term bear market. So this is the bigger problem here. Horizontal rate right here. This guy right here. This is where the market breaks for S&P. So it's actually extremely bad that we're losing this level here. That's not good at all. This is the long-term bear market. And we covered this in the monthly maps class the other day. This is long-term. So we might be losing the bull market today against all of our surprise. So if you are a bull, you're going to want this line to hold. If you are a bear, you want to fuck this line and say, or you want to say, fuck you line to this line. Don't fuck the line, but give it a middle finger. This is the turning point. At 666, I give up. I'm retiring. I can't do this anymore, guys. Illuminati's been confirmed. I can't even tell you anymore. It blows my mind. Like, it's been like this for like the last 2 weeks. I can't even begin to tell you. This is like the craziest part of the market, guys. Illuminati confirmed. Freaking devil's market here. Freaking market makers, dude. They troll you all day long with this crap. You know they do. Anywho, I'm still hanging into that position here. Let's hold on to it. I trimmed it a little bit. Come on, NASDAQ. I trimmed you down from 3 to 2. Now you're in 2. Let's get back above MHP and ride it up. Let's run it. Let's go. Let's push it. Okay. So here, yeah, this has been a crazy number for the longest time. And that's where the long-term bear bull market is. That's where the flip is on monthly maps, you guys. So if we start losing this, it's a bigger collapse. So now we fall into long-term market support 661. I'll show you on a tick chart that exact bounce right there. Hold up. You'll see how cool that is. At 661 or 666, you're going to see the market's going to have a really fun time. Oh, whatever number that was. 661 on S&P. Sorry, I'm on the NASDAQ chart. I can't even anymore, man. This market, dude. I'll tell y'all. I'll tell you what. Got some 666 action right here. Right here. This is the one. This is that break point. So let's see what it looks like on the minute chart here. Yeah, right when you get to that level, you see how the market has extreme amounts of volume. Breaking 660, you can see it right here on a volume chart. This longer term, you guys study on my monthly maps principles that I teach you guys. Do you see when you broke that longer term support, does everybody see the volume that came with it? Rock Cedar Boot Campers, you guys get to see that, right? Whenever you break through bear top on monthly maps, that volume starts to come through here. This is longer term volume getting squeezed out. So if you're like a longer term bull, you got to want this to hold. If you're a longer term bear, you want this to break. This is a line in the sand, and volume will go ape shit if we break 660. I promise you that. When you flip from bull zone to bear zone on monthly maps, volume goes crazy. Does everybody see this? Did I win the BDH competition? You better believe I won the BDH competition. You know what I'm going to do? I'm going to go to that Tradeify competition, and I'm going to win on behalf of MyFundedFutures as well. And I'm going to go to the Ninja Trader competition, and I'm going to win on behalf of MyFundedFutures. I'm going to go everywhere, and I'm going to leave a paper trail of victories, baby. I'm going to go win as much as I can. Sorry about that. I muted my mic for a second. So when you break through that long-term bear market structure, you're going to have some volume that's going to get crazy. This is the longer-term volume. This is bear market top on monthly maps. You guys, y'all feel free to like watch the stream, like in the future to learn about seeing this in real time. You see what the first thing I did was I went through and I ran those calcs really quick. Watch what happens when we lose this clear bull level right here. If we lose this, the market's going to die, like crazy die. It's fighting very hard to hang on to this. So let's hope it does. But it's going to get a little wild here for a minute. This is dangerous trading, guys. So I'm going to tell you, low risk for me, pros only, 4 micros, right? Nothing big. This is very much betting on the longer term bull market holding. My confidence, at least on a day trade, is not that high, but I'm betting on the longer term bull market holding. That's where my confidence is. And I'm betting that, you know, Trump and China is not going to turn us into a bear market. And if it does, I'm going to be wrong small. Like I said, I know I'm trading micros because I'm on the edge here. And we'll see. Yeah, well, not if my students beat me. Yeah. So you know, any trading competition, I love to go represent. So you guys are welcome to represent. I know it's a big event. You know, we have a fun rivalry with the Tradeify folks. We're all friends, but you know, it's always a cool rivalry between networks and stations. So, you know, we got to show up so we can smash the Tradeify TV traders, of course. Show them who's boss. But you know, in the name of MyFundedFutures, let's crush it. Ron's still speaking, probably. Let's hold that 666 devil's number. All right, let's go. My NASDAQ's starting to pay off a little bit. I don't like the bigger position I have, but let me keep it at 3. I doubled down on NASDAQ on that dip and I got into 4. So I just trimmed to 3 minis on my NASDAQ. I'm keeping my 4 micros on S&P. This account is the one that has $5,750 on it. It has some room to play. It's now in the profit on the entire trade. Now it's in the green. That was kind of risky to jump in on that big of a shot, but I did bet on the bigger market. Let's see if that guy rolls. 3. I got 3 minis now just for the retrace. I'm going to trim to 2 right now on that big green candle. And now I got 2 to ride with the cost basis at 741. Beautiful. So I was building off through here. I've taken out 2 of the 4. Now I've got 2 long at MHP slightly above. Great cost basis management. I'm good. I'm wrong small. If I'm wrong, easy as that. Leave a trail of Benjamins. Oh yeah, you know I will. Consider a CAT active now. Oh yeah, 100%. CAT is active. You can easily see that. So when Catalyst is active, we teach you guys no trading, right? You're watching me trade with micros because remember, we teach people when CAT is active, no trading whatsoever. The reason for that is because we don't trust that people have good risk management. So we try to train market avoidance in this type of environment rather than participation. But, you know, I'm really good at scalping. So I usually will on the stream take some trades, but I try to demonstrate on the stream good practices, you know, like I'm not throwing all my accounts at it. I'm definitely not being like super YOLO-y about it. So that is not the event. That's the event. So this is the one that's going to count, not top to bottom. We're looking for that sudden swift move, and the catalyst will come off of this one. So risk interval off the top, 58.50 from 27. So let's just make it about 30. So right at about 30, I'm sorry, 70, CAT is active at the same spot. So right about here. I'm estimating it, but you guys know the drill. This guy right here. So that's where CAT is active. This 50. So wait, 58.50, I think is what the number is. You get the number from the table here. Yeah, 58.50 off of 70. That's 28.50, which is at the top. Yeah, that's pretty much it. I'm off by like 50 cents. I don't care. Too lazy to change it. CAT is active, low purple. So yeah, I'm betting right on the edge too. Longer term bull bear market split, CAT active here. Yeah, it's the same thing. You guys usually get to see me like talking and hanging out with y'all. You very rarely get to see me making trades at lunchtime because there's not any. You might have always wondered, what does it look like when Matt trades? Now you get to see my brain and how it works live, which is kind of fun. If you've never seen me trade before, you're watching me manage positions, keep the risk small, do some measurements, come up with some calcs, fall on the floor when we confirm the Illuminati. And let me tell you something really fucked up about the stock market. I swear to God, dude, these market makers, whoever's running this show, whatever Illuminati's behind this, they love screwing with people. They love throwing in like 69, 420s, 666. You see it all the time. And the S&P crashed in 2008, the absolute bottom of the stock market and the market financial crisis. Look where my mouse is. Look to the right. You see the right of my mouse? 666.66. You see this? You see that? There's some shitheads working on Wall Street. They're like some guy. I always like try to say like, I did the joke last time. It's like, hey, buddy. Let's like buy everybody. Let's, you know what I'm saying? Like, it's really just hilarious. Whether it's a coincidence or not, you know, there's some shitheads down there, you know, run. You know what I mean? All right, let me close this out. I got this account up a little bit. This one's up maybe $500. I'm going to hold my runner at 2. This one, this account's still down about $300 from all the playing around the position. Fire. Yeah. And so, like, in reality, like, it's maybe the algorithms, I don't know, but you start to see weird, stupid numbers show up. You know, there's some idiot just like, hey, bro, look what I did. They're like, whoa, you're such an animal, man. He's like, yeah, check out what I did. All right, so that account that's at 57 is now up to 67, 68, 69. I did get a really solid run on that. That's 120 points. I think at the next ring candle, I'll close out with profit. That was a lot of drawdown to sort of like grab that. Let me take the full profit on that. That's good. I'm going to hold on to these 4 runners just to let it go, just to see that on longer term structure. Dangerous trading on the edge of a catalyst. Okay. So the account that's 57, I'll update the screenshot in a second, is up to 67. The one that I'm currently trading micros on the screen is still down $500. So that one's still in a net loss since I've been on the show, but the other one's up 1,000. So here's where we are now. I'll close everything out fully. Very nice. I was just touching it with 2 accounts, nothing too crazy. This one went up 1,000. This went down 300. So again, you know, it's crazy market environment right now. I'm catching the falling knife, trading liquidity pockets in and out quick. There you go. So it's a wild day. Yeah, I'm not super eager to catch the dip and push it back up, but I'll scalp in LPs all the time. This is my bread and butter trade. So is this some of you guys' first time? Y'all tune in the show every day, but is this y'all's first time to ever see me make a trade and talk your way through it? Have y'all, is this your, your first time to actually see me make a trade? Y'all see me talk about markets a lot, but lunchtime doesn't often give us good opportunities to scalp. And you're always wondering, like, I hear Matt trading and people talk about Matt trading, but I've never seen him trade because I'm new to MyFundedFutures or I've never actually tuned in and watched it. There's a lot that goes on when I'm trading, right? Masterclass live. You get to see like what I'm doing, what I'm thinking, and like essentially turn my fan on. It's like freaking hot in here. Walking you guys through like my thought process through some trades is very like hopefully insightful for y'all. I do a lot, right? I don't just, you might say, you know, you might be a trader that's using some tools and you might have a couple things that you do when you trade. You may not, you may like, well, always wonder, well, what's different between this guy, Matt, and me? Like, what does he do that's different than me? Like, I want to learn from him, or maybe I'm just as a new trader and this guy's got 15 years. What will it look like for me in 15 years, right? When you're thinking about yourself. And you got to see how quickly and effectively I ran through and grabbed information, getting in risk, cutting out of risk, talking. I was like, I grabbed 2, then I grabbed 5 more, and then I trimmed down to 4. And so I call that hooking. Like I hook into a better cost basis by adding a bigger position smaller and then trimming out earlier. My normal position was 2. I grabbed 5 more here for 7. When I got the first up, I closed down to 4. And now I got a cost basis of 4 right here at my exact pivot that I want to be long at. So now I'm flat here by hooking into a better cost basis. My original 2 here, I now have 4 here. This is a masterclass in position management. I'll teach you guys that a lot. I had 2 there. Now I've got 4 there. I've got a bigger position for smaller. And now I get to decide how I want the trade to play out. Now I'm flat at the pivot I want to be. So whenever you get that extra burst of volatility on top of all these A+ pivots, I usually hook into a better cost basis by taking a lot of risk really quick and then dumping it on the first pop and then getting my cost basis slightly lower. I took a small loss on this at the start of the day. I was down $200 on that account. But now I have a better cost basis and I'm only down 500. Now I can let this guy ride up and then I've got a pretty sizable trade in case it goes. So you get to see how I make decisions off of volume in these positions real time. When the market's falling, when you're on the edge of like destruction right here, catalyst active and long-term markets and stuff, running through and grabbing the monthly maps info very quick is very important. We had this class yesterday. And now you guys get to see me do it live. Like, where is the market fall apart? And I said, if you're a bear, you want to get rid of this number here. If you're a bull, you want it to hold. So that's it. So essentially, like, this is what 15 years of trading experience sounds like upstairs. And if a lot of you guys are like, that's a lot of stuff, right? Trust me when I say, as you get better, the things you do now, which might be tough, will seem routine. You'll do this stuff like in your sleep. And then 10 or 15 years from now, you'll be like, doing whatever. Imagine like Stephen Kalajian, the guy's got like 44 years of trading experience. Have you heard him talk? I get lost listening to him talk. He's miles ahead of me. And like the way he can perceive and think about so much so quick is like insane amount of practice. And you see me like, hey, let me get this data. What's this data? Let me calculate it. Let me convert it. Let me put it on there. It's just years of practice. I've done the same thing for years. You get just to be habit at this point, So, yeah. So remember, there's a lot that goes on upstairs. You'll see a lot of people trading, all the time on socials. But for the people that do very well, you're going to hear like it's almost like a freaking typewriter once they start orating their thought process. You probably heard me bouncing numbers all over the place, spitting numbers out while I was trading to kind of teach you guys what I'm doing. Okay, I'm going to get in here. I'm going to add 2. If it falls, I'm going to add more. Wait, I got to grab to find out where that long-term market is because I know that's the break point. Let me grab it real quick. Let's load it up. Let's convert it to futures. Okay, cool. I'm good. You know what I mean? Like I know what I need to do, and it just becomes routine and practice. Another person sitting next to me listening would be like, I'm totally lost. And that's normal, right? Like I could listen to Magnus Carlsen talk about chess and it would just go over my head. And I'm 1500 ELO. Like I'm pretty good at chess. I'm not anywhere close to being a grandmaster, but I would the guy would be like a freaking superhuman. I wouldn't be able to understand what he's saying. So when I explain my thought process, hopefully you guys get to see what trading is like inside of my head. It's all about risk management. Like now the pressure's off. Now the market's on the good side of things. Now if I'm wrong, I'm only wrong small, which is always my goal to get a good cost base at the pivot. My goal is to get the pivot I want with a decent cost basis. That way when I'm wrong, it's just small. And that's how I keep my losses small. People say when you make money, your wins need to be good and your losses need to be small. That's partially true. Or you need to have a high win rate. The combination of both of them is very effective. But the idea is I want to have a decent position at the spot here. And I'm there. And so if I end up being wrong and the market starts to lose this, then I'm just going to cut out and I'm down barely $1,000 in one account. Not a big deal, right? But in the middle of the chaos, this is dangerous trading. And honestly, I know I've been doing this long enough to know what the risk was and to be able to handle myself there. I've just been, trading forever. Anyways, your first time to see me taking some trades, you're definitely welcome to ask me questions or whatever. Manipulating a cost basis is the secret to a profitable trader, which is exactly what you guys got to see. I hope they make a clip out of this. Very good lesson for you guys. Cost basis management is the secret to day trading. You can't day trade by picking the long and picking the short and being perfect on your entries and exits. The secret to a day trader is effective position sizing and cost basis management. That's it. They have a hard stop loss. I do. When the market's crashing, I bend it a little bit. I take the largest 1 minute candle in the last hour as my allowed overshoot. 833 to 902 is 70 points of overshoot. So I was going to allow about 70 points of overshoot from here, which puts me right at 660, right on the edge. So that was the 70 points of overshoot was right about here. And I was holding my breath right there, wasn't I? Right? What's hedge pressure level? It's gamma exposure maximum of market makers on weekly options. It's gamma exposure maximum. Am I entered the trade? Yeah, right on my screen. There's a circled box around it. Little green text there. Micros only, keeping it small. My style of trading, no price action. It's volume prediction. So we basically invented a whole new style of trading. It's going viral this year. Like we just getting so big on it because it's a different method. It's not technicals. It's not price action. It's not order flow. It's not candles. It's not patterns. We isolate volume prediction or volume pivots, and we basically predict it off of hedging flow. And it's called positional risk analysis, is why I called it. So essentially, I can find where volume will be very accurately in the market. And then I can use the order flow due to hedging to predict direction. I'll go off to the side that draws arrows to help me find the direction. As you see right here in NASDAQ, there is long pressure off of orange. See how there's a long arrow off of orange? There's hedging pressure, we call it hedge pressure, that lifts the market there. We should draw a fan on the screen called whoosh fan. They're a little inside joke we have the RS community, but there's a little whoosh fan there. And we draw a little fan there to blow up the market upwards right there. And that's a pretty good trade. As you guys see, pretty sizable. We retraced almost all of that last little drop there. And now I'm going to close this position out. I definitely got a pretty solid run. I just got 80 points on NASDAQ with 4 micros. Looking pretty solid. Let's trim down to my last runner and hold 1. And I'm good. So there you go. Now I've trimmed my 3 down to 1. I'll let it ride back to the top if it goes. So we'll see. Actually, you know what? I'm going to cut out the whole thing because S&P just hit the close on its gap. Let's trim the whole thing and call it a flat trade. Good deal. And that's it. So like the bulk of what you guys got to see me do here was from about 12:11 until about 12:30, 20 minutes in and out and done. Good deal. And I'm going to wait and see what happens. Yes, sir. Yes, ma'am. Anyways, I'll stay like 5 extra minutes because I was late. But questions you guys have for me about my trading style? How do you stop alpha decay from too many people using? There's no such thing as alpha decay on volume pivots. It's not a gimmick technique. Volume exists because people trade there. An example is penny stocks. If you were to go pump a penny stock and say buy here at $3 and 10 million people bought at $3, it would go up even faster. Volume pivots are only amplified by participation. So we're isolating where market maker hedging volume is going to be. So if more people are trading off of a pivot based on volume, you're only increasing its effectiveness. There's no arbitrage to be exploited. Like if everybody were to buy like, 2 things that trade near each other and they separated a little bit and somebody shorted this one, somebody long this one. Well, the more people trading arbitrage, it goes away. Arbitrage opportunities disappear. Yes. Any kind of volume pivots, you only make it stronger. That's a great question. People asking it, well, is your technique effective? The more people that use it, it only becomes more effective. So yeah. How do I know which direction to trade in the point of control? So I don't know which direction to trade. I guess, and everybody guesses. And my guess is an educated guess based on this algorithm right here. This algo shows me which direction is the likely candidate. When we fall to this orange, plus 70 points of overshoot, which we teach that boot campers in the VIX class, how to allow for overshoot, which you watched me do. Exactly 70 points, which is exactly the distance of that candle. That's why that rule of thumb is so good. Use the longest 1 minute candle in the last hour as your allowed overshoot at a strong volume pivot. And you'll see that 1 minute drop is usually about the allowed overshoot. And we dropped exactly 70 points for a bounce back. How cool is that? So really solid rule of thumb. This is about what your volatility is. And it's been my rule of thumb forever. Now, how do I know which direction? Well, 90% of days will close in the same box, dark gray, light gray, that opened, and 90% of days will stay there with the confluence. We have it. Orange, 74% of days will close above orange. It's just probability, statistical trading. This is back test. When it says resistance, it's about 74. It's about 90% as well when it says support. The confluence has lowered these probabilities, so market's diving down here. I'm just betting that we stay up here. That's basically it. And that is demonstrated here on the algo where it shows me that positional move. Is that if the market does fall, monthly hedge pressure lifts it up roughly 74% of the time, which today was one of those days. Love you, Matt. Only been here trading for 4 months, and your boot camp and streams got you over 5K in payouts last month. The teaching, the boot camp, that makes me very happy to hear, man. I believe that like very, very few trading educators out there, and we have a boot camp, but it's only $1 a class. We don't charge a lot for it. A lot of trading educators don't focus on the most important stuff, which is cost basis management, position sizing, which is today was like a masterclass in my style for what I do. But the secret was not predicting the direction. The secret was getting in small enough to hold through 70 points of drawdown, which 2 micros certainly allowed me to do that. I didn't jump in 5 minis here on NASDAQ. The account that allowed me to take 70 points of drawdown with 3 E-minis took about $4,000 a hit. And although it could have bounced and I made a lot of money, I ultimately was wrong and took a smaller, lighter win on that one rather than get the full reward on it because it did overshoot. Crazy days like this, I try to scalp at least something, right? Great question. But yeah, so and again, when people are learning trading, if somebody's not teaching you cost basis management, position sizing, how do I know to do 2 micros instead of 5 minis there, right? The idea is that's the difference between a good trader, or sorry, a terrible trader and a master trader. And it's about betting. The amount you bet, how you manipulate your bet. When you're playing cards, it's adding to your bet, taking away from your bet, folding, doubling down, things like that. That's all. Like betting with the odds is really what I do. Straight up. Okay, guys. I think that's it for me. I really appreciate y'all. Sorry for the delay. Like I said, they're building a fence. Hopefully it turns out to be beautiful. And we'll see how that turns out. I'm going to head out here. I got to head to my show on my stream, but we love you guys. Thanks for tuning in to MyFunded TV. And if you guys are going to help us go, slay people at this big Tradeify contest so we can, our little fun rivalry we have with them, make sure you sign up for Team Rocket Scooter because the biggest team wins a prize. But anyways, like I said, any trading tournament, whoever hosts it, even though it's a competitor, we still go have fun there. We're going to represent. Terry crushed it at BDH. I crushed it at BDH. I'm going to go crush it at Ninja. I'm going to crush it trade. I'm going to crush it everywhere. In the name of MyFunded TV, we're going to go out there and win, show that we're the best. Thanks for tuning in. I love you guys. We'll see y'all later on my stream.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral, price dance in a trance. Pyramids of profits if you catch the right glance.
Inner circle moves, shadows on the screen. Trading on the edge, chasing that dream. Cipher in the candles, fortune in the haze. The cipher in the riddle, money through the maze.
Liquidity hunts, snipers in the dark. Stop loss graves marked by the market shark. Order block sermons, preaching through the pain. Catch the ICT code, ride the profit train.